All right. Good afternoon, everybody. Welcome, it's Don Kaufman. We're going to start here momentarily. Please let me know that you hear me all right. Yeah, feel free to chat in. A couple of people are chatting in where they're from, so fantastic. I like it. We're going to start here again. Just a couple of informalities, Hey, if you're just tuning in, you should be able to hear me right now, and if you can't hear me, well, I can't help you on that front. Um, in fact, we're even going to turn on a camera. Is that okay? Is that okay? I know it's scary, right? Sorry, I'm looking over at another monitor right now. Yes, welcome. Welcome to my office. You can't really tell. It's a background over here, so it is what it is. But welcome to St. Croix in the U.S. Virgin Islands, where the power goes out very frequently. That's a greeting from the Virgin Islands. They don't tell you that. That is not in the brochure of living on a small island in the middle of the Atlantic. Things like the power goes out. By the way, it's beautifully sunny. Nothing going on over here. All right. So looks good, sounds good. Thank you guys. And again, feel free to chat in if you guys are comfortable, where you're kind of joining us from. So cool. Greetings from London. We actually have one of our associates here, Jeff Bierman. He's actually on the north side of the island right now. Actually headed over to Ireland. It's vacation time here in the U.S. It's vacation time. You wouldn't know it though by looking at the markets today. All right, it's good stuff. Let's get right into it. I want to jump right into it. So welcome everybody. As I was saying, a few informalities. What are they? Number one, you can ask questions throughout the course of today's presentation. In fact, I encourage it. I am reading the webinar chat. If you see me looking around over here, I have a lot of monitors. Okay, so I got a monitor here, 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 here. So a lot of monitors. It takes a couple of monitors to be able to actually run this broadcast, camera, everything, while obviously a PowerPoint presentation. That and I've also got umpteen different trading applications up. One of the things I will say, and you'll hear me say this a couple of times today. Look, everything I do in terms of trade activity, it's completely no holds barred. You get to see everything that we do. And I'm very emphatic about that because I think a lot of people talk about returns and so forth and don't actually show you some of the trades. And you will see, okay, exactly not only my trades, what's in my account, P&L. I never hide like a monitor tab here, what we're up or down in a given day. And again, that's absolutely critical. So yeah, let's jump into it here. So welcome everybody. Again, you are joining us for a TheoTrade presentation. This is Ultima Alert. All right, high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. As I throw up this risk disclosure, as I was saying a moment ago, ask questions. I'm reading the chat here in real time. I point because that's my other monitor. I'm reading it in real time. So by all means, you can interact with us throughout the course of this presentation. And it's not just myself over here. It's myself. We've got Jeff. We've got Brandon. We've got Brian. We've got Todd on here. All are very capable individuals of answering any number of questions over here. So again, a few more formal housekeeping items. Look, I'm going to go through a huge amount, okay, in the next, it's probably going to take me about 90 minutes. Is that okay with everybody? I'll try to run about 90 minutes or so. I'm always adding stuff to this presentation. So I stress to you, okay, focus, kick out the kids, the grandkids, close anything like phones on silent mode. In all seriousness, it's one of the things I always remember to do. Got my phone right now on silent mode. Close Facebook, get rid of Facebook. I'm helping you. Shut the door. Whatever else is distracting you, get rid of it. You're going to need to focus on this because I go through a lot. Okay. And again, in a very short period of time, I'm going to unload on you because I'm actually here and I'm showing you how to generate, okay, consistent returns like the following, like an IWM, a 62% return, and a QQQ, a 49% return, and the spiders, a 50% return, okay? We're going to talk about the trades, obviously, behind, those particular returns. And as I said a moment ago, okay, we take a very no holds barred approach. Like I want people to see, like, look, whether it's an up day or down day, okay, take a look. You can see P&L. You can see, what I have in terms of any margin requirement, which is going to come up here. So again, bear with me as I actually jump through this. Again, we will dig into these returns specifically and the exact trades effectively behind those particular returns. Now, stay with me right until the end, okay, of this broadcast. Our gift, okay, to you today for tuning in and spending time with us is our auto expected move indicator. It's an indicator it's changed the way that we view markets. And most indicators, when you look at a chart, most indicators are very backward looking. The expected move indicator, and again, it's a $500 value. Okay. One of the reasons we give it to you is I just mention it incessantly. You'll even hear me bring it up throughout the course of this webcast today. But by the way, rather than showing you a screenshot, I like to use a live trading application. People always ask, like, is this live? Is live. You're seeing it. It's live. SPOOs right now, SPOOs or S&P futures are down some 46 handles. Handles are points. Markets are getting hit across the board. It's lovely out there today. But when I talk about things like expected move and the expected move indicator, it's an indicator. It's forward looking. And it's based on option, okay, pricing. It's what the option marketplace says, okay, the market's supposed to move. So NVIDIA, I think most people are aware what NVIDIA happens to be, but NVIDIA, all right, supposed to go up to about 470, okay, or down to about 424. I'm just rounding it over here, okay? And you can see this upper and lower line. You're like, well, how does it distinguish that? It's the option marketplace handicapping forward risk. That's what expected move happens to be. An expected move, okay, it's a phenomenal tool. It can be used for risk manager. It can be used for trading options, stock, futures contracts, you name it. Okay, you can use this particular indicator, and that indicator, okay, help me find winning trades. Spider 60%, another spider trade for 50%, QQQ for 64%, QQQ for 52%. One thing you'll see a lot of here, okay, the underlying I trade, not all that critical. You'll learn a little bit here along the way that. Okay, spiders. Everybody here, familiar with spiders? Okay, spiders. Anybody familiar with spiders? Okay, if you've never heard of it before, it's probably one of the most prolific products ever. It's also the heaviest volume in both, in the shares of the ETF and the options. But yeah, it's again something we will discuss quite extensively. So somebody was asking about crypto. Yeah, it'll even expected move will calculate for crypto. It depends on the product. Okay. Look, this is why you're here today. So as we said, this is Ultima alerts. And first and foremost, we're going to talk about Ultima trades and why they are so ideal, okay, for the current market environment to potentially generate monthly income. We're going to talk a little bit about skew. It's a symbol, okay, that professionals use, okay, constantly to ultimately trade in Ultima. They're going to learn how and where to find edge as a retail trader. One of the things I'm also very emphatic about is people use that term all the time, like, oh yeah, edge this and edge that. Look, okay, we're going to show you mathematically here in just the next 10 minutes, okay, what the edge happens to be, okay, and how to reap the benefits of high probability trades while learning little known secrets, okay, to mitigate losses. So we're going to talk about very high probability trades. And again, some of you may or may not be familiar with some of the techniques we're going to talk about, okay? Even if you are familiar with this, I'm going to take it to a whole nother level. And we're going to discuss products that are the most viable candidates, okay? And what products are a recipe for disaster. If you hear me use the term product, it's because it could be Apple, it could be Tesla. Those are products, okay? I don't care, okay, so much of what it is that, if you will, you trade. But There are certain products that are very viable and certain products, okay, again, that are a recipe for disaster, and I want to exploit those. Some more returns: QQQ 50%, QQQ 51%, TLT 53%. If you're not familiar with TLT, okay, that is equivalent to an ETF in the bond product. Spiders 50%. Now, before I go any further, I just want to set the stage so I don't have to fight the entire time, okay? You can do what I'm about to discuss without a large trading account, right? It's again, you're going to hear me mention this throughout the entire presentation, but I feel like during this particular presentation, like I fight with people all the time. They're like, no, you don't need a lot of money in their account, okay? $2,000. You can do any trade, all right, that I'm going to discuss in here in terms of strategically with $2,000, okay? You don't have to have a lot of time. I'm going to show you, okay? We send these trades directly to mobile devices, okay? And you can even execute off of any mobile device, okay? Trading experience, okay? We can have you up and running in no time, like 0 to trading in a couple of hours. You know, the most arduous process is, well, hopefully you have a brokerage account. You're not going to need a lot of margin. Margin is always going to be an issue. Listen to that one right there. Margin. Don't worry about it, because people are going to be like, I don't have the margin for that. Yes, you do. Okay. Yes, you do. A lot of the rules in this industry have changed, which I'll discuss here momentarily. And you're like, well, how do you know that? Okay, because I spent 15 years in the brokerage world. So you can do these trades with as little as $600 tied up in margin. You always have some margin, right? It's the cost of doing business, as little as $600 in margin. Okay, you can also do this without technical knowledge, meaning that, you're not going to have to be a tech geek. Okay, you're definitely not going to have to be a chart geek, because I take, technical knowledge. Some people are like, does that mean I have to be a tech geek? No. Does it mean I have to be into charts? Definitely not. Okay. Being isolated, okay? We have really supportive community here at TheoTrade. Hidden fees or high commissions, okay? There aren't any anymore, all right? Most of the brokerage firms are very forthright about what their transaction costs are, okay? The cost of trading has become rather inexpensive, and, okay, we're gonna mitigate risk. TheoTrade is incredibly risk averse, okay? Risk averse, we just hate risk. We're gonna show you extensively today how to actually mitigate some of that exposure, right? How to actually control those risks. So before I go too deep, here's a little bit about me, and I'll give you literally the nickel tour. So I always say to start off, I watched order flow for 15 years, okay? And in large part, that is why I'm here, but kind of gives me a very unique and special skill set, okay? First, I grew up around this business. People always ask me how I got involved in trading. I don't know any better. I grew up in the business. Right? And when I say I grew up in the business, I had an uncle that traded on the floor in Chicago. Ever since I can remember, I mean, as before I was born, he started trading. He built one of the largest trading firms ever at that time. This is actually in the 1970s into the 1980s. The firm is called O'Connor and Associates. He started with one seat on the floor of the Chicago Board Options Exchange. He built the firm to over 500 seats on exchanges worldwide. In 1992, he actually sold the firm to the Swiss bank. To this day, it's like one of the driving forces behind, obviously, what the Swiss bank became UBS. Okay, one of the driving forces behind the entire, Swiss banking industry. And I just got enticed into it. In the late 90s, I started trading in Chicago. Very shortly after I started trading in Chicago, met a couple of traders. One of them was named Tom Sosnoff. Tom said, hey, we're starting a firm. It's called thinkorswim. Why don't you come with us? Okay. I was okay. I was all of the time of 24 years old. So I went with them and spent the next 15 years of my career. I was on the executive team when we took the company public in 2007. I was also on that executive team when the company was bought by TD Ameritrade in early 2009. I signed a 5-year lockup clause with TD Ameritrade, which actually took me to my exit date was early 2015. So after 5 years of TD Ameritrade and being tortured by a large company, I kid you not, I went from running a division of a company that had 2 people in it. In my last organization, I had 768 people inside the organization at TD Ameritrade. So I am out. I'm out of the contest. Thereafter, Okay, in 2016, we actually launched TheoTrade. And many of the instructors here at TheoTrade come from a background of both thinkorswim, TD Ameritrade. Okay, again, I built and ran education. Probably the most insightful thing that we got at our time at both thinkorswim and TD Ameritrade. And if you have not heard of thinkorswim or TD Ameritrade, okay, I mean, effectively, we're the largest in terms of order flow, okay, at that entire time frame, meaning that, nobody traded more, contracts, shares of stock on the retail side than both thinkorswim and TD Ameritrade at that time frame. So the most insightful aspect of my entire 15-year career in the brokerage world, we got to see everything that you did, everything. We studied it, okay? Meaning that we would look at a subsection of like 200,000 accounts and said, if you did an iron condor, would it make money? We looked at covered calls. We looked at iron condors. We looked at people that just traded stock. We looked at people that traded futures contracts. If you thought of it, we studied it. And we studied it, okay, using an entire data team. An entire team of like actuaries. We used to call them the nerdery. And the nerdery, okay, helped us actually study, okay, the depth of what worked in this business and what didn't. Okay, here's the kicker. They wouldn't let us actually use the information. The Securities Exchange Commission looked at that as actually pushing people, okay, directly into, for instance, specific trade ideas. So we took the knowledge, we left, we built TheoTrade. And what you're going to learn here, okay, at TheoTrade specifically today comes from the knowledge of watching, okay, literally billions in other people's mistakes. It's just, it's incredible what you are capable of doing inside of a brokerage firm. It's like wearing a pair of handcuffs everywhere you go. We were thrilled to actually leave. Okay, so we've been out now, and I say we because it's myself, it's Jeff Bierman, it's Blake Young, it's Brandon Chapman, it's Todd Sweet. All of these individuals came from a background of both thinkorswim, TD Ameritrade. Some of us were actually market makers prior to that. Some of us were actually hedge fund managers. Okay, many of us have actually managed large sums of capital and continue to do that on the side here. If you ever need to get a hold of me after today, just go to support@theotrade.com. Put Don Kaufman in the subject line. You'll get right to me. I just love to mention. Okay, you can email me. I respond. Okay, not like 10 other people. I will respond to your emails. All right, this is actually some media that I do from time to time. This is TD Ameritrade TV. Ironically, that was the last time I was in Chicago. It's crazy, okay? It's literally been now 4 years since I've been back to Chicago. It's the longest period I've gone in my entire life without being in Chicago. I still do TD Ameritrade TV every single week. I'm on TD Ameritrade TV. This is actually CNBC. I just threw this one up here because it's the most, if you will, of the memorable events because they pitted me against Kevin O'Leary. And I was right. All right. This is actually the cover of Investors Business Daily. The reason I bring this one up, this is fairly recent. I say it's the cover of Investors Business Daily. The entire article, okay, was about, all right, last year. It was 2022, okay, where markets were tanking. It was like one of the best years that we've had, ironically, since the financial crisis. That's not exactly like a popular, it's funny that that is the quote that they actually put on the cover of Investors Business Daily. So we made the cover of Investors Business Daily. It's like Trader of the Year because ultimately we knocked them dead last year. It was a great year. We're very much into volatility. In fact, here's a sample of the trades in 2022 that Investors Business Daily used. Named me Trader of the Year. Bond trade here. Bonds were the ZB, 54%. The ES is the S&Ps, 53%. ES, 55%. Bonds, 64%. ES, 51%. Look, I'll be showing these exact trades, okay, and many more just like it in the next couple of minutes. So we're going to dive into it. You guys ready? Everybody good? All right. Market chaos. Speaking of market chaos, you will see me periodically look back at the screen over here. So I am monitoring quite a number of positions. This is just a thinkorswim account. Okay, I predominantly now I'm trading inside of a TastyTrade. So I kind of go back and forth. Some people are familiar with Tasty. Some people are more familiar with thinkorswim. Okay, what is it? What do you guys trade on? Tell me. Okay, just chat it into the webinar chat. It's fine. All right. These are not rhetorical questions. I'm curious. Where are you guys trading? Okay, so some people are on TOS. So, my claim to fame on TOS is built a lot of the analytics on here. A lot of the analytics had a lot to do with the analytics. Okay, a lot to do with some of the trade tab analytics in here. So, when it comes to thinkorswim, I would probably be second to none in terms of the education, in here. So I am also intimately familiar, of course, with Tasty, because the same developers, same crew. Okay. All right, let's get into it. So all right, a couple of people are actually typing in over here, different brokerage firms. So what are the first things? A little chaos in the marketplace has arrived. It's not going to abate anytime soon. I can't tell you what the future is going to bring. I know a lot of people hop on here and they say, you got to do this and you got to look at this and this is coming. Look, inflation, is it cooling? I don't know. Okay. The biggest CPI print of the whole year is coming out this Thursday morning, CPI. Okay. What is it? Consumer inflation. It's going to be, it's a big, when I say it's a big print, everybody wants to see if inflation's cooling. Fed continues to put the rates a little higher, maybe got one or two more hikes. Strong dollar, exports inflation. If you haven't looked at the dollar, okay, the dollar's rocking. The dollar is back rocking back to like 102. That is not good, people. That it exports inflation. The world inflation goes up when the dollar's strong. Geopolitical risks are proliferating. And I got to tell you, I got a smile on my face the entire time because it's game on. Embrace the chaos. You have to understand that markets, they got real in 2022. Okay? You've been in a zero interest rate environment basically since the financial crisis. All right. You don't realize the effects of that. We're all of us are what I term volatility starved animals. Okay. They don't even know what to do with volatility anymore. When I say that markets got real, do you remember that markets used to go up and down? Yeah. Last year reminded you, but this year, okay, all of a sudden markets straight up. The AI, okay, straight up. So of course, the last couple of days where things are getting a little bit more sketchy. Look, stock picking. Reddit boards, they're not going to cut it. Like if you said right now, find me a stock, long or short, I'd just be like, what's the point? Yeah, what's the point? Like it's just way too much risk out there. You're going to need a strategy that embraces that chaos, embraces the volatility, doesn't rely on directional bias. If you're still thinking right now bullish or bearish, okay, I think you're at a severe disadvantage. I think it's incredibly hard. Okay, it's not a market that's just straight up. All right, and of course people go, but. Okay, look. Literally this year. I just want to show you something because I think it's essential that you guys see this, right? This year, what's driven the entire returns? Like think about the sectors in the S&P 500, right? Here, I'm going to pull up the spiders. That's the spiders on a year-to-date basis. They're up 17%. You're like, yeah, man, 17%. Okay. All predicated on what? Have you looked at the financials this year? Have you looked at them? They're basically unchanged on the year. So if you own any financial stocks, not so good. Look for the energy sector. What's the energy sector? Oh, it's up a whole 2.7%. So the entire market is based on what? Oh, it's based on the same 7 stocks that keep going up. Okay. Most people's portfolios are not performing nearly as well as the market as a whole this year. And keep that in mind. Okay. You can't just be a stock picker because all of a sudden, and NVIDIA isn't going to work anymore, and Apple isn't going to work. By the way, Apple is in corrective territory. Microsoft is in a correction. They're down 10% from the recent highs. Both Apple and Microsoft are in corrective territory right now. We have to go out there, no directional bias, embrace the volatility, and reduce risk while substantiating monthly returns. Okay. To do that, we're actually going to teach you a little bit about Ultima trades. Now, time out. Ultima. When I say the term Ultima, okay, it's not ultimate. What Ultima is, it's actually a volatility of the volatility of the volatility. Okay, it is a tertiary derivative. Okay, and you're like, what the? You don't have to worry about it. It's a cool name, but that actually is what's producing profitability right now. It's Ultima. So we call them Ultima trades. It has, again, nothing to do with ultimate. It drives me crazy, okay, because a lot of people, they don't really know what they're doing. So the IV skew, higher implied volatility skew, is resulting, okay, in great edge right now. And we're gonna, by the way, if you're not familiar with skew, okay, you should get familiar with skew. Okay, you type in SKEW. It's only calculated once a day, right? And to look at skew, I want to show you the entire history of skew. You ready? We're gonna go back. We're gonna go back 10 years. Okay, that's skew for the last 10 years. And I'm actually going to change my chart over to an area chart. Okay, what would you say about skew right now? It's incredibly high. It's one of the highest it's ever been. Okay, in the history of recorded skew, this is almost the highest it's ever been. Okay, which implies there's a whole lot of edge in today's marketplace. So we're going to go after it. How? Ultimate trades are designed to sell options, okay, while reducing risk. Now, again, this is where people, they always fight me about, I don't have the margin to do that. Okay, sure you do. You're okay. You're going to have margin to do this. I don't have, like, just calm down. Everybody calm down. Okay. We're going to learn a little bit about selling options. Now, some of you have experience with options, others of you do not. Okay. Options. I said the O word. Okay. Look, many people have heard through the grapevine that selling options is a great way to make money. How many people have heard that? It's okay. Okay. You can answer. Everybody. Anybody want to answer that one? How many people have actually heard that? Honestly, like, hey, man, selling options. And then some of you have actually gone out and you've attempted to sell options. But if you've experimented with selling options, you're going to know full well there's a lot of risk. Here's what happens to people that sell options. How many people have actually done this before? Okay. How many people have done that where they've gone out and sold some options before? Because I'm going to tell you exactly. By the way, okay, think of me as like, the doctor of trading, because you're not going to tell me anything I haven't already seen before. I spent 15 years in the brokerage world. I had 2 years in the market making experience and risk management experience prior to that. You are not going to show me anything I have not already seen. And it's okay. This is what people do. Okay. They sell options, a little bit of money, and they sell options, make a little bit of money, and they sell options and make a little bit of money. And then they build up their contract size a little bit. Okay. They get a little, courage, and all of a sudden, and they just get hit by a Mack truck and they're like, oh. Look, okay, that is what we are going to cover today, is how to do this effectively, how to make some money doing it, how to make money much more consistently, and how then to mitigate risk. When I say mitigate risk, control the risk. Okay, how do we keep make money, make money, make money, make money, big loss. Okay, no big loss, big loss. Okay, again, we're very risk averse. So today's session, going to separate the myth from real risk, fact from fiction, and selling option premium. Again, if you're brand new to options, you've never had experience with options, do not panic. You can do this. You may know nothing about options. That's okay for today's session. Newsflash, you can do this, okay, with $2,000 in your account. Now I throw 5,000 up here. 5,000 though is for retirement accounts. You can do this now in retirement accounts. You can sell options, okay, in retirement accounts. But for those of you today, brand new, have no options experience, just bear with me, because look to grasp big concepts: risk, probability. Those of you that have experience, if you're more experienced, you can actually grab some of the little nuances. And I say little nuances, like I'm going to cover criteria. Okay, how far out in time, where I'm going with this, the delta, the probability. Let's dive right in and I'll actually take you to it. Look, there's a lot of facets of selling premium. When I say facets of selling premium, people call premium selling all kinds of crazy things. When I got involved in this business, right? When I got involved in this business, I learned this again from probably a very different point of view than most of you would learn it. Okay. When I got involved in this business, they're like, look, there's all these trades. Okay. What do you mean all these trades? Well, there's iron condors and there's credit spreads and there's bull call spreads and bear call spreads and bull put spreads and bear put spreads. And there's combos and there's mambo combos and there's conversions and rolls and boxes and jelly rolls. And okay, it just goes on and on and on and on. And there's butterflies and there's 1, 3, 2 strike butterflies. You know what? Relax. In the end, in this business, what you really have, you got calls and you got puts. Now, you may not even know what those are, but you got calls and you got puts. That's options. And what can you do with calls and puts? Huh? Anybody? You got calls and puts. You can buy them or you can sell them. And that is it. Credit spreads, delta neutral trading, selling naked. Those are just variations of selling premium. But basically, it's a call and put. What did I do? You either buy it or you sell it. That's it. Okay. When I buy something, it's palms towards me. When I'm selling something, it's palms towards you. So look, that is options in a nutshell, just your calls and puts. You can buy or sell, and people make this business far more complicated than it needs to. And selling premium could be both bullish or bearish. But for today, we're actually going to be generally market neutral. What our members are doing. TheoTrade, a place with a comprehensive set of resources to study, okay? Exceptional instructors, beginning with Don Kaufman. I have a PhD, okay, in quantitative economics. I learned more about the markets and the economy from listening to Don K, okay, when the Fed spoke, than from my graduate studies. All the instructors offer unique seasoned trading analysis and insights, okay? And the chat, the other members, is exceptional. Lots of shared wisdom. You can go as deep as you want or stay as shallow to the shores, your choice, okay? Multiple years on TheoTrade, but it's worth the cost, the time, and the effort. So a long journey, highly recommended. Okay, been a member of TheoTrade for think about 5 years. Okay, again, I'll cut to the chase over here. 5-star for customer service classes, chat rooms. Okay, in general, highly recommend. Okay, and grateful for Theo. Onward here. So let's actually get into the trading side of things. Probability and profitability. Okay, your trading is based on probability, whether you know it or not. Trading is based, okay, on probability. You and we can create trades all day long with a 90% probability of success and still lose money. One of the reasons that I cover about probability and profitability is I constantly have people, there's actually already one in the chat room here, okay? I constantly have people that ask me how often you're right. I go, how often do you want to be right, okay? What I don't want to confuse, and you shouldn't either, being right 90% of the time does not assure, okay, profitability. Probability alone does not make you profitable. Markets, okay, are always a trade-off. Markets are always a series of trade-offs. Higher probability, higher risk. You can be right 90% of the time. You can still lose money, but where can you find edge? As I said, in the next 5 minutes, we're going to jump into edge, and that's exactly where we're headed. Good. Let's get into it. I'm going to show you guys something really important. When I talk about edge, okay, what is it? Okay, it's a trade that you can do that is mathematically, okay, repeatable. For instance, if you did the trade like 1,000 times, okay, it would show what is termed a positive expected return. I mean, the trade itself actually has positive expected returns. So let's actually get into it here. Discovering probability and premium selling tactics. Now, I always start this conversation from the exact same point. This is a $100 stock, okay? Do I own the stock? Stock. I do not own the stock. Why? Okay. Personally, I think it's got a lot of risk. Do I own stocks from time to time? I do. Okay. I absolutely do. I have an investment portfolio just like other people do. But for argument's sake, on this trade, I think owning stock, especially right now, it's just chaos. I mean, markets move up, markets move down. I mean, one day you're going to wake up and the stock's going to be down $10, and you're like, oh, you know, there goes, $10 I really didn't have to lose. It's crazy. It's just crazy. So instead of trading the stock, because this, and by the way, the prices of stocks these days are nuts. $300-400. Like, I own 11 shares of Nvidia. It's cool, man. Okay. But seriously, the price of stocks these days is crazy. So instead of trading the outright stock, we're going to trade an option. The first example I'm going to give you is on buy side. We're going to buy, okay, we're going to buy a 120 call. And for that, we're actually going to pay a $1 debit. Now I'm going to take this down below. All right, we're going to buy a I'm going to fix that. Okay. A 120 call. We're going to pay exactly $1 for it. And that thing is going to be good for 3 months. Look, on the screen right now, on the screen, you're going to need to know about options. It's everything. You're like, what do you mean? What's a 120 call? Let's just, for right now, let's just talk about calls. I want to talk about puts. Puts confuse people. Even people that know how to trade are confused by puts, right? Why? Well, a call is the right to buy. A put, okay, gives the right to sell. But selling the right to sell is just mind-blowing. Let's just worry about calls for right now. So we're going to go out and we're going to buy a 120 call. What's a 120 call do? Well, the 120 call gives you the right to buy the stock at what? 120. Do you really want to buy the stock at 120? No, but I want the right to buy the stock at 120. Why do you want the right to buy the stock at 120? Because you think the stock is probably going where? Up. Now, when people first got involved in options, that people is like the most alluring trade. You're like, oh, I've done that. I've gone out and bought a call. Let me ask you something. When you went out and bought a call, what happened when you bought the call? Okay. Anybody? Okay. Ooh, what happened when you bought your call? This is an interactive session, people. Okay. This is an interactive session. You bought the call. Okay. And it goes, I'm shrinking. Okay. And all of a sudden, the call goes down in value. You're like, oh, that was great. But that call gave you a shot. Now, what does it do? You have the 120 call. You have the right to buy the stock at 120. Did you really want to buy the stock at 120? No, but you have the right to buy the stock at 120. Do you have to buy the stock at 120? No, but you have the right to buy the stock at 120. If you buy a 120 call, where do you want that stock to go? I want it to go soaring all the way to 130 because you have the right to buy the stock at 120. Everybody else in the world now has to pay 130. What is a 120 call? Don't worry about what you paid for it. Don't worry about what you paid for it. What's a 120 call worth with the stock trading at 130? Okay, what's it worth? For those of you that are new, you have to understand a 120 call gives you the right to buy the stock at 120. You don't have to buy the stock at 120, but you could buy the stock at 120 and sell it 2 seconds later in the open market for 130. So if you could buy a stock at 120 and sell it to somebody else in the open market 2 seconds later for 130, you would make at least what? Okay, well, it'd be worth at least $10. Okay, it'd be worth at least $10. Never worry about, okay, shares or contracts. Don't worry about any of that stuff. That thing, okay, would be worth at least $10. At least $10. Now, obviously paid $1 for it, but I wanted you to see that's the buy side of options. The buy side of calls, okay, is a lot of hoping, a lot of praying, but it gives the right to buy the stock at 120. We're not going to do that because the problem is when you go out and you buy that 120, in fact, okay, I'll show you the exact problem with this, okay? When you go out and you buy that call, a lot of times the stock stays flat. If the stock stays flat, you lose your $1. If the stock goes down, you lose your $1. Even if the stock goes up, you still lose your $1. You need the stock above 120 plus the $1 you paid just to be able to do what? Break even. Okay, welcome to the marketplace. Now we're not going to go out there and buy it. We're going to do what? We're going to sell it. So very carefully, we're going to go out here and we're going to sell a 120 call. And we're going to sell it for exactly a $1 credit. Let's put it down here. So we're going to sell a 120 call. And that 120 call, we're going to collect $1 credit. And we're going to say that this thing is good for 3 months at a time. Great. Time out. Hold a sec. Hold everything. Now, for those of you that have experience, what did I tell you not to worry about earlier? What about margin? Okay, I told you don't worry about margin. We're going to take care of the margin. Okay, we know we have the power. We'll take care of the margin because I know the questions that are coming are like, I don't have the margin to do that. What if the margin were do that were nominal? What if it was less than $600? What if I could prove that to you? I'm happy to do so. Okay, because we will. We're going to show you the margin of this is nominal. We're going to show you could do this in an IRA, right? So we go out there and we're going to sell a 120 call. And then other people are like, wait a second, that's selling naked, selling naked. It won't be. Okay. But we need to get through this example. It's a critical example for you to understand, okay, how you as a retail trader can achieve what we term edge. What's edge? Okay. Something you can mathematically repeat. And right now, edge, okay, huge by huge. Edge is huge right now. Okay, so let's get into this. So I go out, I sell a 120 call. If I sell a 120 call, I just sold myself into an obligation. Okay, obligation to do what? I'm obligated now to sell my stock to somebody at 120. Do I own stock? No. So that is why it's called naked. You're like, naked. We're not going to go naked, but I need the explanation. I need to drive it home where you're going to find edge. Okay, we're going to sell a 120 call. A 120 call obligates me to give somebody stock at 120. And for that, I collect $1. Let me ask you something. If you sell something for $1, what's the most you can make on it? If you sell something for $1, what's the most you can make on it? Like I haven't had enough caffeine today. If you sell something for $1, okay, the most you could possibly make is $1. Most ways. It's like, you go out and sell a car to somebody. Nobody comes back a week later. You're like, you sell them the car. Nobody comes back a week later and goes, oh, that was one hell of a car that you sold to me. I'm like, oh, I'm so into that car that I just gave you an extra $1 for your car. Okay. It never happens. And it's never going to happen. When you sell something for $1, the most you can make is $1. You go, I'm doing all this to learn to make $1. No, but we're getting there. Okay. What I need you to understand is edge and probability. Okay. Now, first of all, that $1, you don't get to keep that $1 till what? 3 months from now. You're like, that is forever. That's exactly why I'm showing it to you, to torture you. I seriously am trying to torture you. Look, I want to get to a probability. The stock has to go from 100 all the way to 120 just for you to do what? Start to lose money. Okay. That's a big jump. That's a 20% jump. A 20% jump. Like you could see that coming from like a mile away because you're not even in the nosebleed seats. You're in like the parking lot tailgating. Okay. That's how far outside the stadium you are. 20% out of the money. Most of the time, what's going to happen when you sell this, okay, it's going to expire and you keep your buck. A lot of the time, stock's going to go down. That happens, by the way. By the way, you guys remember that when stocks used to go down? Okay. Sometimes the stock goes down, you keep $1. Sometimes the market even goes up. It'll go to 110, still keep $1. I mean, that thing gets to 115. 115, you might wet yourself, but you're still going to keep $1. Even if it gets to 120, even, you still get to keep the $1. You don't start losing money to 120 plus the $1 you collected, which is 121, right? So from a probability point of view, timeout, does that have a high probability? Does the trade have a high probability? Okay, does the trade have a high probability? Oh yeah, there's a really high probability. It's like 90, 95%. Okay, super high probability. Could you lose money on it? Of course you can lose money on it. Let me tell you something. If somebody ever tells you, this trade has no risk, run. Okay, don't walk, run. Trades all have risk. I'm going to show you how to mitigate that risk. Okay, how to control the risk. And I apologize. I've been in the market my entire life. Risk mitigation, okay, is my game. And people don't necessarily know the term mitigation or risk averse. Averse means hate. Okay. So when you think about that kind of stuff, like, again, we have to get through though conceptually why this trade is going to work. Why is this trade going to work? Well, first of all, it has a high probability, but probability alone doesn't make you money. Okay, because the stock could go from 100 and jump all the way up to 130, in which case, oh, that is going to leave a mark. Okay, it's going to hurt. Now, you guys okay? Because the question that you're going to ask, I know the question you're going to ask. We're going to take this into the market. You're going to go, why are you so far out in time? You've noticed in my example, I intentionally went out 3 months. Typically, traders sell short-dated options. If you guys have heard lately, okay, all the rage, like if you look at like Facebook or something, it's 0 DTE. How many people have heard that? I want 0 days to expiration. You realize this has absolutely no edge, that all the edge goes to the market making firm, all of it. If you want to give Citadel, you don't know who Citadel is, the biggest market maker in the world. You want to give Citadel your money, okay? Al, I've got his phone number right here, okay? Happy to take down, your number, pass it to him. Just hand the money directly to him because 0 DTE ain't going to happen. You're going to get killed doing that. Traders are trying to sell shorter dated options. That's why you're actually tuning into the webcast. Okay. That's why you tune into this, because when people look at this, they think theta. Okay. The longer you're out, the faster what? Gary? Well, the further out you are in time, the slower the decay, and the shorter the time frame, the faster the decay gets, right? The closer you get to expiration, the faster the decay. What if everything you knew about time decay were wrong? What if everything you knew about time decay were wrong? Okay. Am I one that's just going to come in here and be like, it's all wrong, man? It's all wrong. Not at all. I'm actually going to show you exactly, again, what edge is, where edge lies. You guys ready? Now we're going to go into the real marketplace. Okay. When I say the real marketplace, we're going to take our little example of a 120 call and we're going to make it applicable, okay, to a real market environment. And you're going to see why I sell options so far out in time. Here's what I want you to remember. further out in time is where the edge lies. Further out in time is where the edge lies. Further out in time is where the edge lies. Let's get into it. For the first example, I'm going to jump over. I'm going to use thinkorswim. Thinkorswim. So as I mentioned a number of times over here, okay, I have a very open approach to this. If you ever get into a webinar and somebody doesn't show you your live account, it's because they don't know what the hell they're doing. I promise you on this platform, oh, I do, and I trade. I have 6 fills today on this platform. Okay, how many fills do I have over here? Activity. Okay, it looks like 1 in this account, but wait, there's more. Okay, there's a multitude of different accounts over here. I got another fill over here. Okay. Oh, 2 trades here, 1 trade there. You can see number of trades, 2 trades there, 1 trade there. But we show you everything that we do here. When I say everything, every P&L. You want to see where I'm at today? It's up about $14,677. Okay. Obviously, that's moving rather rapidly. That, okay, is a fairly methodical day for me. I don't look. I'm using, and people always want to know how much capital is in the account. This one has about what 450,000. There's a bunch of different accounts, but this account usually has about 450,000 in it. Okay, in that neighborhood. Okay, I have another account over here. It's also an IRA, but again, it's completely open. You get to see everything in terms of P&L. You get to see every position. You can replicate anything, and you can do this. You know, you don't have to have 450 grand in your account, which is fairly nominal. Okay, like all totaled up and all the accounts we're trading. And to be fair, okay, one of those is technically a corporate account. It's one of our business accounts. All totaled up, I'm moving about 1.5, 1.6 million. Okay, and that's just the trading accounts on a day-to-day basis. So, and you can do this though with $2,000 in your account. In fact, okay, one of the things that I did, it's actually one of the better performing accounts. I opened up an account with just $5,000. Okay, and just to show that you can do this, okay, in a very minuscule account. Actually, that's one of the trades that I did today and exited that trade for a 50% gain. So you're going to see all of that. And again, I want you to know that, yeah, you can do this. This is a $5,000 account. You can even do it with $2 grand in the account. So with that, let's take it over to thinkorswim. Okay, let's go over to the spiders. Okay, the mother of all products, spiders. Why do I use the spiders? It's just marquee. It's marquee. Now you can see in my account, position. Okay, I don't talk about anything that I don't trade, and I will trade anything that I talk about. So for the first trade that we're going to do, ironically, I think I've already have a position in here. Yeah, we'll just put another one. Okay. Ironically, I do have a position in here for the first trade that we're going to do. All right. We're going to go out and I'm going to write this up here. Okay. We're going to go out and I'm going to do exactly what I was saying. How far out are we in time? First of all, how far out in time are we? Okay. That's 101 days, 101 days, which is basically what? 3 months, 3 months, 3 months, 3 months, just like I did in my example. Is that okay with everybody? I'm going to go out. And I'm going to write this up. I'm going to sell, okay, the November 17, 490 calls. And for this, let's just put it down at what, like $1.06 credit? By the way, I can hit the marketplace right now. I'm going to put it in at $1.07 because I'm actually going to route it at $1.07. Okay. I'm going to sell that for $1.07 credit. All right, so let's go do it. Okay. By the way, if I try to route this at $1.07, which I will do, okay, fire! Come on. Okay, route that at $1.07. So the market right now is 106, 107. I'm not going to fill immediately. I refuse to go out there. Okay, I refuse to go out there and just pay the market. So the market's $1, $1.05, $1.07, whatever. I don't have to fill like right now. I don't feel the urge to have to fill right now, but I want to show you. I'm in line. There I am, Captain One Lot. Captain One Lot rides again. So if the market just kind of ebbs up a little bit, I'll fill. Let's just let it work. Working. So I went out and I sold, and it's very important that you guys understand this concept. I just sold, okay, those calls for $1.07, right? So $1.07. Now, Now what do? You guys tell me, what do I do? Okay. Everybody's doing something. I'm doing nothing. Where's the edge in this trade? It's going to take me 101 days to make $1. That's ridiculous. It's absolutely ridiculous. Okay. What if I told you the edge in this trade is something called Ultima? Okay. What's Ultima? It's the volatility, the volatility, the volatility. Basically what it means, okay, volatility has what we term skew. This is implied volatility. The skew collapses. The skew collapses if you know where to look for it. And in this particular trade, oh, I'm not going to fill here, but in this particular trade, here, we'll fix this. Okay, want to see me fix it? Okay, I just want to make sure that I actually get executed in this trade. We're going to fix it. I hate chasing. Okay, but I'm going to hit it at, I'll hit it at $1.06. We'll see if we can fill here to $1.06. Okay, work it. Markets right now are volatile, people. So now I'm $1.06. Okay, and I'm not going to fill, but I'm not going to chase this thing. So if we go down, don't worry about it. I'll fill. And eventually I'll fill. Anyway, $1.06. So what Ultima basically is has to do with skew collapsing. You don't have to worry about that. How about if I told you, okay, in a very short amount of time, you can keep most of that dollar. Very short amount of time. Okay. And I'm going to show you exactly how to do that. In fact, the best way to price options with all things being equal, let's say the market did not move. Okay. Let's say the market didn't move. Is the market going to move? Yes. But let's say it didn't. Okay. The next option series is what? 73 days. How many days are between 101 days and 73 days? How many days are between? Okay. We're getting into higher math. Higher math. Okay. That's where we go. 101. Okay. Minus, obviously, 73, 28 days. How much can I make on this position? Okay. In 28 days. How much can I make on this position 28 days? What I'm going to do is I am selling the 490 calls for $1.06. Okay. I want to look at the same 490 calls. Okay. When there's only 73 days left. So basically what I'm saying is we're fast forwarding. You go, oh, that's weird the way you look at it. Yeah. If you want to know what a 100-day option is worth when there's only 73 days, open up the 73-day options. Does that make sense? Because what I'm trying to show you is all things being equal. Now, things are not always equal. Markets move and so forth, but we'll cover that. All things being equal, what's this option going to be worth exactly 28 days from now? Survey says open up the 73-day options. Okay, open the 73-day options, okay, and go right to the 490s. What are they worth? 38 cents. So, okay, exactly 28 days from now, 28 days from now. All right, what am I going to do? I'm going to buy back my Nov 17 490 calls, okay? And I'll be able to buy them back for a 38-cent debit. What do I make on this trade? You should be able to make anywhere from about 50 to about 65% in 1 month or less. Do you see where that edge lies? The decay rate is unreal, but the decay rate is not theta decay. It's not just theta decay. It's actually technically volatility, but volatility and theta are one and the same. If you guys never heard the term theta, okay, theta is time decay. Theta is time decay. And the time decay, and the biggest misnomer is that's how time decays, okay? We're not actually trading for that. We're trading, okay, the volatility. And this thing has been incredible since 2020. Why aren't more people doing it? Okay, I've got returns going all the way back, okay, which I'll show you today from 2021. We started, and I wanted to start fresh in January of 2021, okay, right until like present day for returns of this strategy, okay? We're making a phenomenal amount in here. It's between 50 to 65% in 28 days, and it's repeatable, okay? And the margin is nominal. And you can see I got positions all over in here, right? Obviously, I've scattered positions. You're like, oh, you even have 138 days out. It's a hedge, okay? It's actually a hedge that I've got in the shorter duration. But I've got stuff scattered about all over this marketplace. Why? Because people, this is what works. And I'm going to show you exactly what works. Questions so far? So, okay, Can you make between 50 and 65% in 30 days? Absolutely. The cool part of this is though, look, the market right now is at 446, right? I'm selling the 490s. You realize how far away from the underlying I am? 490s. What would the spider have to do, okay, to get all the way back there? I'm going to pull up a 5-year, okay? The all-time high of the spiders would have to be hit, meaning markets would have to be at an all-time high and then some for me to actually take a loss in the position. I'll ask again, how come you're not doing this? How come you're not doing this? Because the trade is right there in front of you. And people go, well, can I do that in another product? Sure. Okay. When I started off this presentation, I was showing you QQQ, I was showing you TLT. Okay. Let's go over to the Qs. All right. The Qs. Ooh, scary. Let's go to the QQQ. Let's do the exact same expiration to make it easier. Okay. Is everybody okay so far? Because it's kind of quiet in here. All right. Either we're really into this or we have no idea what is going on. That's okay. That's okay. So I like to pick an option right around $1 because it's easy. But here's the 425s. Okay. So here's the 425s. So I'm selling, okay, the Nove 17 425 call. And for that, I'm going to collect, let's call it I'll just hit the, called hitting the bid, hit the bid at $1.26, okay, credit. So I collect a $1.26 credit. If, okay, all things being equal, and again, all things are not going to be equal. The market's going to go up, it's going to go down. But if you actually sold a couple of options, it all work out. But anyway, before I get to that point, fast forward exactly 28 days. So now we only have 73 days remaining. With 73 days remaining, here's this 425. Where's the 425, 425, 425? He's looking. Bingo! It's worth 51 cents. Okay. Hit the bid, take the offer. If I buy that back, okay, I could buy back the 425 call and I'd be paying basically 51 cents for it. Okay. 51 cents. Am I making, again, between what? 50%, okay, to about 65%. And I'm going to tell you right now, skew is sky high, phenomenal right now. We could not, like, this is one of the best times of Ultima that we've seen yet. Okay. Why? Skew right now is like 148. I think it was 153 yesterday. It's ridiculously good. Okay. The higher the skew, the better the edge there is. And the edge right now is spectacular. It's spectacular. Where else can you make 50%? Okay. I'm selling the nosebleed seats, okay, for 50 to 60% returns. Okay. Hey, I'll even show you how to mitigate the risk. And it's critical. And by the way, I know somebody's inevitably going to, excuse me, what about the margin? Okay, I'll get to margin. I promise to get to margin because I'll show you how to actually control the margin in here. And it's so important. You know, it's funny because we have been talking about this. We've been talking about Ultima, okay, for the better part now of almost 3 years at TheoTrade. And like people have been to this presentation so many times, it's just driving it home. Like, yeah, you guys don't really change your presentation. You want to know why? Because it works, man. It works. You know, when something's working, you really, okay, a little tweak here, a little tweak there, but we haven't had to tweak much of anything. I mean, it has been just rock solid. I mean, I've got one of the portfolios right here, and there's not much in the portfolio because I keep closing stuff profitably. You can see every trade in this portfolio, profitable. It's not always true of every portfolio, profitable, okay? That's critical. It's absolutely critical that you guys see that stuff. As I said, it's like no holds barred. Like I want you to see profits and or losses out there. Now, of course, again, people go, oh, why are you selling so far out in time? Look, okay, you can drive, okay, a car really fast. Oh, I filled, okay, I filled. So that was me just filling on that call. So I'm in there, okay. That was the 490 call, sold for $1.06. What else am I working in here? All right. So, oh, I'm still working the other one at $1.07. And I'll leave it in there. That's fine. Okay. It's fine. So I filled it at $1.06. Okay. I'm next in line here to fill it at $1.07. Look at this. Marking 106.5, where $1.07 offered. Sweet. Okay. One of the things that like I'm emphatic about is, you know, when it comes to options, you know, you can drive 100 miles an hour in really short duration options. That's fine. You're driving 100 miles an hour into a brick wall, okay? Or you can come out further in time, okay? Drive in the slow lane and make even more money. You know, people that sell short dated options, they don't understand. There's no edge. If I sold an option with 2 days to go to expiration, okay, 2 days to go to expiration. First of all, let me knock down the number of options that you're even looking at. You sell something that with 2 days to expiration, look at this. To collect $1, you're like right on top of the marketplace. I'm $3 away from the market. The market moves $3, $4 every single day. You're going to get killed. Okay. It's just an absolute wreck. And if something goes wrong and there's only 2 days left or 1 day left, okay, that's it. And somebody said, how do I close it out? Okay. Well, we're going to get there. All right. If you make 50%, I think it's pretty good to close it out, don't you? Make 50%, bail. How do you close it out? Buy it back. Okay. Buy it back. That's it. You know, literally buy it back. Now, okay. Of course, somebody's already, show me margin. Show me margin. Okay. Margin requirement. You can do this trade with less than $600 in the account. Well, $600 margin. You have to have $2,000 in the account. That's not my rule. That's actually, okay, that's the rules of the brokerage firm. You have to have $2,000 minimum in the account. You can do it in an IRA, minimum $5,000 in the account. Okay, and I will show you the margin though. Okay, look, when typically traders are selling short dated options, we're further out in time. Further out in time is so much easier to deal with because we're a mile away. We're out here above the marketplace or below the marketplace. Okay, we're a mile away from where the underlying is. I don't want to be in the thick of the action. Okay, I want to be slow. I want to be methodical. I want to be boring, and I want to make 50%, 30 days get out, 50%, 30 days get out. Just because I'm selling an option 101 days from now does not mean I have to actually hold it 101 days. You realize how ridiculous it is to hold something 101 days? Okay, I'm holding those trades 28 days. Okay, ironically, the average hold time for a trade for us is about 27 days, right? And you can look back at the portfolio and I'll show it to you. So this is what we talk about at TheoTrade. It's criteria, specifics. Again, this theta decay is true, but it doesn't include volatility. Now, to continue on with this, right? Looks good until you realize there's the 90% probability and the 10% hammer. You know, one of the things, okay, that you have to realize about these trades that we're discussing, they're very high probability. Now, I just filled in this trade, right? I'm also still going to offer, I'm still trying to sell another one. I just filled in that trade, but what was the probability in the trade? It's called probability OTM. There's the probability out of the money. Every major trading application has probability out of the money. The probability that this trade, okay, is successful by expiration is 92%. But my probability of making like 50%, okay, is upwards of 95 to 97% probability. This trade, okay, has 95 to 97% probability, okay, in it, and it's critical. So what we're going to do, okay, filled again. Look at that. Market was $1.06, $1.07, and I filled at $1.07. Okay. Yeah, you can't dispel that. That's why you work orders. Look at that. See the $1.07 fill with the market at $1.07? I just sold in the offer. That's what market makers do. Okay. Why? Because they know how to rest in the book properly. Close that up. Close this up. Okay. Now where to go? And we're going to get all these. Okay. What you have to understand is just great, but then there's still risk. Like I think people probably at this point understand, man, that is a ridiculously good decay rate. Okay, I like the question somebody asked, how do you actually measure the decay rate? Don't worry, it's the product you select, okay, which I'll get to. But 90, 95, 97% sounds great. But what happens the other 10% of the time? Okay, market just rips your face off. You got to be careful because you're doing a trade that's way out of the money. But just because the market's way out of the money, nobody gives free money away, right? And when you trade high probability strategies and you're wrong, you get hammered. Now, lots of people have done trades that are very high probability. Like for some of you, you've done a trade called an iron condor. How many people here have ever done iron condors? Okay, I can't see your hand. Y for yes, N for no. Just type it in the chat room, right? Otherwise, I'm just here talking to myself. Okay, if you've ever done a trade like an iron condor or sold premium, what people do when they sell premium, okay, this is good that people haven't done it. And what people do when they sell premium is they go in there and they sell an option, okay, and they make a little bit of money. And then they sell an option and then they make a little bit of money, okay? And then once they've done that 2 or 3 times, okay? And they know how to look at the probabilities just like I did. And they do that 2 or 3 times, and then they go, I'm going to do it bigger. So I'm going to go from the spiders, and I'm going to go to the SPX. The SPX is also known as the Widowmaker, okay? How many people have ever traded the SPX, okay? That's where retail traders go to die, okay? I'm not really joking about that one. That's where I worked. So they trade the spiders, okay? That's like, it's a small world after all, like little things waving. And then you go into like Magic Mountain. It's crazy. The analogy I'm giving you isn't a great one, but look, people build up little accounts, okay, into some pretty big accounts, and then they start trading bigger and bigger and bigger. It's like the market waits for you. It's like, come on, come on, come on. You sell options, sell options, sell options. All of a sudden, Mack truck hits you. I don't know what happened. Instead of losing everything that you made, you lose everything you made plus 50% of your account. And that is the plight of the option premium seller, because people don't understand how to mitigate the risk. Okay. And by the way, people often say this, like, I know, it's like I can see your account. I could for 15 years. You know how many times I've seen this happen where people make money, selling options, make money. Mack truck hits them. The first day volatility strikes are like, couldn't, yeah, over. It's over before it started. Okay. And then after they made some money and they're feeling pretty good about themselves, okay, then the Mack truck hits them, but they cannot get out of their head that they were making money. So people go out and they spend $500 to take a class to learn iron condors, to learn how to make a little bit of money. They end up getting beaten up. Then they take another class. The other class says, oh, no, man, this is what you did wrong. You can fix the trade. Has anybody ever been down this road? I can fix it. Okay, that's like a degenerate trading term. I can fix it, really? So what can you do? You take out a shovel and just keep digging? Okay, fix is such a dirty word. I cannot stand it. 15 years in the brokerage business, totally a cynic about fixing trades. Okay, there is absolutely unequivocally no way to fix a trade without more risk and more transaction costs. That's it. What's the first thing you learn in this business? Okay, what's the first thing you learn in this business? Don't throw more money down a bad hole. Okay. Well, it's not a losing trade. Don't throw more money into a losing trade. It's like the first thing you learn in this business. Then somebody's doing a whole class and they never call it fixing. They call it morphing. Okay. Well, morphing. I was this, but now I'm this. And then I'm this. You're still an amalgamation of crap. Okay. Some fixes may work, but the very notion of fixing just throws more good money down a very, very bad hole. Look, you got to learn how to do this right. Okay. Learn, okay, how to actually build the right structure, okay? When things aren't going your way, it's a piece of junk, let it go. And I've always put up the, like a picture of like a smashed car. Look, the analogy is a very simple one. If you took a car and you drove it off of a cliff and then you brought that car to a body shop, they would be like, well, that's a real piece of crap, okay? I would probably say the same thing about your losing trade. We are going to learn to mitigate risk. Now, we're going to learn proper position structuring, okay? A moment ago, all right, you saw me making what? Between 50 and 65%, right? Okay, let's bring that back up. So this is one of the trades that we did. You saw me making between 50 and 65%. Okay, right? So where from there? If you can make 50 or 65%, but the trade is only done for $1, then what's the key? Okay. What's the key if you can make this amount? And by the way, you look at my trades in here and you're like, that one's close, isn't it? This one's getting close, isn't it? Okay, make 50%. I'm out of the contest. What's the key? Okay, to success. If you can make like 50% in a trade, what's the key to success? Anybody? Anybody? Okay. I like what somebody just said. Do it again. Volume. All right. The best analogy, okay, that I can, the best analogy I can give you is one like this. Here's a bottle of water, okay? I can go out in the open market. I can walk around and I can sell these bottles of water for $1. It's so weird, like the water disappears and it's back and it disappears. I can walk around the street, okay, on this island and sell bottles of water. By the way, people do that look, this is a big tourist destination down here. So there's always people walking around selling bottles of water, and they sell bottles of water for $1. Okay. And then I can turn around and buy it, okay, for 50 cents. So what I'm basically doing is I'm making about 50% for every bottle of water, okay, that I sell. After that, the whole key is this: churn through as many bottles of water as you possibly can. Okay. I want to be a water selling maven. I'm out there selling water. I'm hiring people to sell water. Okay. If I can make 50 cents every bottle of water that I go out there and sell, okay, the key then is volume. You got to do volume. You got to do it again and again and again and again. The whole thing with a repeatable strategy, okay, is actually turning on the spigot for it. Okay, no pun intended because it's water, but the whole thing is repeating the strategy. The problem is, okay, in most businesses, like if you went out there and sold water, you got overhead. Eventually, you're going to have to start hiring other people because there's only so many bottles of water, number one, you can carry. There's only so much you're going to be able to do on one street corner. Okay, you're going to have to actually cover different street corners, different areas. You're going to be, before you know it, you're going to be providing people a 401k. And I mean, it's just ridiculous. What if we could do just that in this business with nominal overhead? Okay, nominal overhead. What I want to show you, okay, is how to actually structure this stuff and structure it effectively. We okay so far? So if you will, right, if you will, we're going to go out there and where were the spiders trading? Okay, where were the spiders trading? 445-ish, okay, was the SPY at 445, okay. So if I went out there and sold some options, which options were I selling earlier? I was selling for what? The 490 calls, okay. I might be out there selling, and you know what? I didn't show you guys this yet, but you know, instead of just selling calls, couldn't we theoretically also, okay, sell puts? Let's open up the 101-day expiration just to make a quick point, okay? We're going to sell some puts out here. There we go. Look at those 370s. Gold. 370s, man. They're still trading for $2. Yeah, the puts are trading for double the calls. So we're going to go out there, okay, and we're going to sell some 370 put, collect about $2. Before we know it, probably going to be selling like, you know, 360 puts, assuming the market moved down, collect another $2. Okay. We'll turn around and sell if the market rallied. I don't know, the 500 call, collect $1. The point that I'm trying to make, and I could just keep going and going, and I'm a little bit more inventory. What am I trying to do? Okay. Trying to be in the water business. The water business is about churning what? Okay. Churning inventory as fast as you possibly can. Okay. Again, churning inventory as fast as you possibly can. The whole key is in the marketplace to burn through that inventory as fast as you possibly can. If you're selling option premium both sides of the marketplace, what do you want to do? More and more and more and more. Okay. What's going to happen to you though sooner or later? If you go out and do this very strategy, what's going to happen to you sooner or later? I'll tell you exactly what's going to happen. One day you're going to wake up. You're not going to be at 445. You're going to be bam right down here. And the volatility beast comes alive. Okay. The volatility beast is an angry animal and it'll wake up. It may only wake up like once a year. Okay. Maybe today it wakes up. I don't know. But if you're actually caught naked here and naked here, it is going to be horrendous. People, okay, I am telling you, volatility can come and get you. In any business, okay, in any business, there are going to be certain, okay, inevitable risks. In order to do this and do this properly, you're going to need a risk mitigation tactic. You know, if you went out and hired, okay, like 10 or 15 people and you're selling bottles of water and growing your business and so forth, you're going to have insurance, you're going to have all this overhead costs. There is some overhead to this business, albeit minimally, there's some overhead. What's the overhead? Okay, the overhead is risk management. Risk management. You're going to have to reduce risk in some, okay, way, shape, or form. Because if you don't, sooner or later, the market's just going to kill you. Okay. You don't know when the risk comes, but when it comes, it's fast, it's furious, often can be overnight. Like today, the S&P is open down 30. Ironically, it's about where they are right now. Okay. But again, when that risk comes, you're unprepared. You can't be caught flat-footed. As I was saying earlier, I live on an island, okay? And my island does not have a volcano, but on the island here, there's one, 300 nautical miles away, there's a volcano. And I always feel like, okay, if you live on an island with a volcano, you have to like, carry a lamb up there, like, I don't know, every 6 weeks, chuck the lamb in the volcano. It's a sacrificial lamb. It makes sense in my head, okay? But the point that I am trying to make with this, all right, the point that I'm trying to make is you must mitigate, you must control risk. If you don't have a sacrificial lamb, look, every business is going to have a little bit, okay, a little bit of overhead, and this is going to be nominal. So in order to do this and to do this effectively, we are going to use what we term hedges. Now let's start from the beginning here and show you, okay, how to properly execute against your position. So right now, the SPY, okay, is trading at 445, okay? We're gonna go out and we're gonna sell a 490 call, okay? And we're gonna collect $1. And maybe we'll sell, for instance, the 500 call, okay? Collect $1 on that one. I don't know, okay? Maybe the market rallies back again and we sell 510 call and collect $1. That is my inventory. Simultaneously, okay, I might be selling 370 put, collect $2, okay? Selling 365 put, collect about $2. Selling, okay, I don't know, 355 put, okay, collect $2. This is my inventory. How do I control risk? Enter the hedges, okay? As I mentioned with that bottle of water a moment ago, so you have bottles of water and you can buy the bottle of water for 50 cents, okay? And you can sell the bottle of water on the street for $1, right? Then anything else, incidental, is overhead. If you have to have other people hired, it's obviously overhead. Your business gets big enough, you got to start buying insurance policies for everybody, okay? Then, it just goes on and on and on of all the overhead. Your only overhead of this business is a nominal transaction fee and the hedges. And the hedges, I can show you how to get the hedges for next to nothing. There are 3 primary hedges. The first one is an RTS. It stands for risk twist spread. Number 2 over here, probably one of my favorites, VVS. That's a VIX vol. It's one I'm going to show you in a moment. Number 3 over here is termed a gamma iron, okay? There's a multitude of different hedges to select from. Now, I'm just showing you 3 of them. One, I think that's the easiest and the most effective to interpret is this, okay? I can actually use a hedge. I'm going to put that hedge right in here, okay? And I'm going to call that hedge a VIX vol spread. How many people here know what the VIX is? How many people know what VIX is? Okay, VIX, it's the S&P 500 volatility index. Right now we're trading spiders, so VIX makes a lot of sense, right? Because what VIX is, the volatility index, is a tradable product, but you'll know this. If the market goes down, the volatility goes boom up. And I don't mean a soft sell-off. A soft sell-off is not 445 to 370. Like, you can't get from here to here, okay, without arousing any VIX suspicions. So if the market just gets clocked overnight, okay, boom, the VIX is going to explode. Imagine we had a very, very small trade in the VIX, nominal in cost. But if the market comes ripping down, okay, what does this trade do? Explodes in value, and it actually opens up like an umbrella to actually mitigate exposure of these trades on the put side. It's absolutely essential. It's essential. Without it, okay, you're done. You're just done, okay? And I know people are worried about margin. You don't have to worry about margin. We're going to talk about margin here momentarily. On the upside, okay, on the upside, we actually use a trade called a gamma iron, which effectively is a buy-side strategy that if we rally up, you got to actually pass through the profitable trade before you can actually hit the calls, okay? Again, it's just, okay, it's just a matter of structure. We get into, well, how many of those VIX spreads should you have? How many of those gamma irons? But is it really going to eat into? It's going to be a nominal fee, a very nominal fee. But you have to understand, without the hedges, you don't have a business. Okay. Without, like, if you go out there and start a business, eventually, I have to incorporate, I have to do this, I have to do this. Without it, you got the big donut. You got nothing. It's hedges or nothing. When do you hedge? You always have a hedge on. Why? Because you have no idea when you're going to wake up into a calamity. That's what volatility does. It's the beauty of volatility. Hedge now or forever hold your peace. People, that's the full Monty. And it looks like a lot. You're like, I'm selling some of here, selling some of here. What happens if we just, went out there and text you, okay, exactly what the hedge happened to be? In fact, I'm going to pull this up, okay, right now. So make sure I can pull it up on here. Here we go. Just wanted to make sure you guys can see it. It's TheoTrade, okay? And everything we actually text out, right, in terms of messages, they're right there, okay? It's my messages. Every single trade that we do push notifications, we do text messaging, okay? Why? Because there's not going to be a lot of guesswork in this. If I'm going to trade, you can trade with me. It's fine, okay? Now, let's cover something that I think is critical. First of all, why do you want to actually sell premium? You can do it in a small account. I'm going to show you that momentarily. Okay. Produces positive decay, may enhance existing positions, probably incredibly high probability of success. Okay. I can't remember the last time I had to use a hedge. I can't remember the last time that the hedge was impactful. Obviously, it was in 2022, but it's been well over a year, I think, since the hedges have actually even had to been used. You never have to buy or sell the stock. You don't use stop orders. You could be wrong on market direction, and I'm telling you, you need this in your life. Now, how many people here want to see how to do this in a small account? Anybody? Anybody want to see how to do it in a small account? Okay. Here we go. So they, first of all, okay, there's a couple things to know over here. Number one, right? Number one, day trading margin rule. There is no day trading rule if you know about futures, okay? Futures have no day trading rule. I figured I'd show that to you because people always talk about, I don't have day trades. I'm not day trading here. Okay? I don't want you to think I'm day trading, but okay, there's this thing called options on futures. There's a product that I trade all the time called spiders. Spiders, okay, hold huge, okay, margin. Why? Because the spider, okay, is what we term an SEC FINRA product. All right. By the way, there's nothing in the brokerage industry that's changed, okay, other than they've actually loosened up the rules since I've been there. That's an SEC FINRA product. Me, I'm actually going to go out and trade /MES. Some of you may know this, some of you don't. MES. It's a micro S&P. What is it? Basically the same thing as the spiders. It's the S&P 500. This is the S&P 500. It's a micro. Okay. And the answer is minimal margin. You go, I've never heard of that. It's okay that if you haven't heard of it. By the way, it's still a relatively new product. It's only really been around, okay, about 2.5 years. And the second they actually released that product, I was like, Ultima is the way to go. Let's do it. Okay. Because now everybody can trade it. You go, well, how much margin? First of all, okay, this is a $5,000 account. Let me push this over here. It's a $5,000 account. If I went out, okay, 101 days, and by the way, I do have one position in this account. I want to make it fair. I have a put three contracts sold in a $5,000 account. Okay, what's the margin being held on three? $2,219. Now a 3-lot is not a small trade. Like it drives me crazy. I can't do this. Of course you can. Okay, that's a 3-lot though. I closed the other 3-lot of calls. What's cool is if you sell puts, it doesn't tie up more margin to sell calls. Why? Because the market can go higher or the market can go lower, but it can't go both ways. So I could go out right now, okay? I could actually sell another 3-lot of calls in here. I could sell like calls in here, okay? And it would not even tie up more margin. This would actually work. Look, if I went out there and did a 3-lot here, it'd tie up another $32. But the point that I'm trying to make, I can go out, okay, let's go way out in the future, 101 days out, way out, like I've been talking about. Okay, sell that little monkey, which is the 4900s. Right, let's open that one up. Bear with me. Let me clear that out. Okay, 4900s. Let's sell that. Okay, now if I were to do this trade, okay, here's the interesting and ironic thing. If I were to do this trade because I have other positions on, it's actually a $16 credit. You're like, what? Okay, yeah, because I already sold puts. So it's not actually tying up more margin. The average call or put that you sell will only tie up 600 bucks. Can you do this in an IRA? Of course you can. Okay, watch. Can I do this in an IRA? Can I sell calls in my IRA? Yes, you can. You want to know why? Because this is my IRA. You go, how do you know this is your IRA? See where it says SEP right there? It's a SEP IRA. Now you can see it in a SEP IRA. In an IRA, it's going to tie up slightly more margin. Okay, it's going to tie up slightly more margin inside of the IRA, but you can do it. You have to have $5,000 in an IRA to be able to do this. Okay, there's never an excuse anymore. There's just no excuses. You can do it with 2,000 bucks in your account. You can do it in an IRA. Okay, again, my broker doesn't let me do it. Okay, you got the wrong broker. Brokers will let you do it. You just have to understand, all right, where you're going with this. Look, I'm telling you, you need this in your life because we're not sitting here about direction. You don't see me whipping out a MACD and a Fibonacci and a Bollinger Band. I cannot depend right now on being right. Okay. There's been times in my career where I am so hot directionally. Okay. And there's times in my career where you're so cold, you can't find the front door in your own home. And I'm telling you right now, okay, whether you know this or not, you are so cold, you couldn't find the front door in your own home. Forget it. You're not going to be able to tell me where markets are a month from now. No way. Okay. I can't do it. Nobody can do it. You just turn off CNBC forever. Okay. Shut down like Bloomberg. You don't have to read any financial news. We're in chaos, people. We're in chaos. Wait till the CPI comes out Thursday. All we're doing is throwing chocolate-covered hand grenades into the market once a week. It's a Fed announcement. Boom. It's a CPI. Boom. Take advantage of them because each one of those events is actually higher. Okay. Higher volatility. More volatility is good. This works better with the higher volatility. Okay. You don't have to have high volatility though, because a high skew is just as good. Look, selling premium could potentially bring in consistent returns while minimizing your risk. Okay. We're going to talk about criteria in just a moment. But before I get into criteria, when I say criteria, the nuts and bolts behind this, first, we're going to explain a little bit about live trades. Okay. Variations of all of the following trades that I'm about to show you can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. What I am showing you, and I'm going to start right here, okay? What I'm showing you right here, okay? This are trade alerts, okay? These are trade alerts. When I say trade alerts, these are trades that have not just been like done in my account. By the way, I'm going to show you every single one of the trades. This actually starts, the portfolio starts in early 2021. Portfolio starts in early 2021. I'm going to show you 18 months of returns. And then I'm just going to say like, hey, you know, look, okay, I can bring you into the live, okay, account. So when I say into the live account, into the alerts, this is the portfolio right here, okay? You can see all the opening trades, to open, to open, to open, to close, to close, to close, okay? And we can actually show you opening and closing trades, right? To open, to close. What you're actually looking at. These trades, again, they haven't just been done. These are trades that have actually been sent out. They've been push notification, okay? You can opt in or not opt into them, just depending upon which portfolio that you want. But this is a bond short put. I'll explain exactly what this is. This screenshot, okay, that you're presently looking at is taken from thinkorswim. This is the opening trade. See where it says to open? Let me highlight that a little bit better, okay? It says to open, to close. This is exact date and time of the trade, and obviously the return, what strike, whether it's a call, whether it's a put, it's all in there for you. Where is that screenshot coming from? As I said, okay, I give a no holds barred approach. We show you every P&L, okay? I know when you guys started this today, I was up 15 grand. I'm sorry, I'm only up 12 grand right now. But we go over here to like the account statement, all right? And for instance, we type in /ES. Okay, I trade a lot of ES. Okay, let's go back. Let's go back a total 360 days. You want an idea of how many trades I've done? Okay, 97 fills. It's not a huge number of trades, but it's 360 days, and you can see everything to open, to open, to open, to close, to close, to close, to open, to open, to open, to close, to close, to close. That's kind of hard to read. So what I did is just basically compiled it like this. So, all right, here's bonds, 57% return. Okay, 53% return, another bond short put. IWM, 53% return. SPY, 51% return. SPY, 51%. SPY, 49%. SPY, 50%. QQQ 62%, okay, QQQ 53%, 50%, 50%, 53%. And again, all I'm doing is starting in 2021 and moving forward. Okay, 57%, 56%, 60%, okay, oh, sorry, 50%, 54%, 19% loss. It does happen. Okay, 54%, 49%, 47%, 51%, 50%, 54%, 51%, 50%. Okay, you kind of get the idea. Now, as you become more skilled, and I'm just scrolling through trades, okay, as you become more skilled, we'll start to actually amp up the product that you trade. So you can see a Tesla short call in there, 53%, QQQ, Amazon, okay? And I say, as you get more skilled, when I start to amp up, right there, ES short put, and ES is exactly 5 times the size of a SPY. So when you looked at the SPY trades, okay, little. Captain One Lot rides again. When you get a little bit more comfortable, we start trading ES, okay? And then when you're a little bit more comfortable than that, you can see the average return is right around 50%, okay? When you're a little bit more comfortable than that, okay, we start doing trades like this, Christmas tree spreads. Now, we're only into, and this again, you can see the opening date of the trade, the closing date of the trade. We're still back in 2021. This is an 85% return, but it's something that I sold for credit of 21, closed it for $3, okay? As I continue to kind of scrolling, you can see a lot of ES, okay? A lot of ES, short calls, short puts, okay? Because that just gets it done. Another Christmas tree spread, 92% return, okay? And again, if you've never seen a Christmas tree spread, it's a type of ratio spread. You can absolutely do these in smaller accounts as well, okay? It doesn't have to be done in the spiders, but Christmas trees, okay? They have an embedded hedge in them. ES short put, ES short call, okay? Look, I just ripped through, a ton of different examples inside, okay, of a given year. That's 1 year. And you go, well, where are the rest of the examples? 2022, okay, was out of this world. I didn't want to cut and paste every single trade in here, but 2022 was out of this world. And one of the reasons, okay, 2022, there's a lot of trades from 2022, okay? In fact, I can scroll back in here and you can start to see everything from 2022. Okay, to open to to close, to open to close, to open to close. All of these trades are in here. Okay, everything is documented, every single trade. Okay, every little nuance from 2022. There were just a lot more trades. I wanted to kind of narrow it down. We can show you literally, okay, up until today. That's 2.5 years. It's over 2.5 years now of very consistent results. Very consistent results. Now that's the TheoTheo portfolio, okay? This is done in the ES. For those of you, okay, that you're like, I don't have the capital to trade such a big trade. We actually have what's called the TheoTheo small portfolio. And that small portfolio, okay, hopefully I'm still logged in over here. This small portfolio, you can see some of the opening and closing orders in here. I know I had a closing order today. I did, okay? This smaller portfolio in here is designed for accounts that are $2,000 to $5,000. If you have like 15 grand, you can do it as well. Okay, it's all in there. Look, you don't have a lot of time. It's not going to be a huge problem. Okay, all the trades that we've done here are displayed live at TheoTrade. All of them are texted out. That's actually why we call this now Ultima alerts. Okay, Ultima alerts. The trade results are perfect for part-timers. If you're not sitting in front of your screen, you're fine. Okay, again, everything is texted out. We do text, we do push notification. Now everybody is in the United States. Okay, we do text for United States and Canada. If you're overseas, we do push notification, which is fine. We have plenty of clients, Australia, Singapore, different parts of Europe. So a fraction of your time is enough to see, okay, solid results. The biggest difference for those of you that have actually heard of TheoTrade, that know TheoTrade, the single biggest and unique difference in TheoTrade since inception of 2016, okay, is we're now providing real-time alerts, okay? Again, we made the changeover quite some time ago, but we are now actually firing trades out, okay, to anybody that opts into that. When I say opts into it, when you actually sign up for TheoTrade, you just put a phone number in there where I want my text alerts, okay? Or you download the mobile application, okay? And we do push notification, right? What better time? I don't know if you have a lot of time to learn a new skill set, okay? But if you don't, you follow the real-time alerts, okay? Look, I can't see much into the future other than the Fed is in a pretty hostile environment. Okay. Selling premium is a phenomenal hedge specifically for recessionary times. Volatility, this feeds volatility, right? It feeds off the volatility. The more volatile we are, the better it is. Okay. But markets could be in a bout of volatility for years to come. The only thing you can see, okay, out into the horizon is volatility right now. Like, could markets continue up? Yeah, but even lately, with going up, there's been huge bouts of volatility. Okay. Follow our real-time alerts. If you have the time to put into this and really learn it, fantastic. You take it to the whole next level. Most people follow our real-time alerts. Look, what our members are saying. This comes from Mike. Says, if you're serious about trading, TheoTrade is by far the best resource out there. If you cannot make dollars, you're not paying attention. Okay. They even have a hands-off approach to trading. Okay. As well as if you really don't want to learn how to trade on your own. Okay. Their instructor's the best in the business. It's just June 13th of this year. Okay. So onward over here, the characteristics of selling Ultima Premium, the attributes, okay, of high probability premium are undeniable. We're not buying or selling stock. You're not going to have capital to do that. We can actually help you fine tune risk to precisely your comfort level. We're never going to use a stop order. So that's critical. We don't use stop orders. We can tailor risk. You can vary timeframes. Okay. All right. Probability of profitability is high. You know, when I talked about those hedges, most of the time you're putting a hedge on, okay, nothing happens. Putting a hedge on, nothing happens. Pull it off 50%, pull it off 50%. Okay. Look, that's critical, right? This is the perfect strategy to enhance one's stocks portfolio. It's an excellent tool for those seeking, okay, returns to build an account. And of course, new products allow for the sale of options in nearly any account size. $2,000, you can absolutely do this, okay? The one thing that people like, they get intimidated by is they saw, you know, oh, I'm selling a couple of options here and I'm selling options here and then he's hedging here. And don't let the options portion of this intimidate you. Let the work be done for you. Use the alerts, okay? As I said, like in one day, we can get you ramped up. We can get you ramped up to the point where you're able to follow those alerts, okay, within a day. You want to master it, put in a little bit more time, that's fine, but don't let the options portion of this intimidate you. Options are the quickest, the fastest, the safest, the easiest way to get where you want to go in the market, okay? But you have to learn how to use them correctly. Even if you have no options experience, we can get you ramped up. Selling premium can initially be done for minimal credits and minimal risk. You can sell, okay? You can sell Ultima Premium and minimize risk. The real thing in here is, I say, you know, don't let it intimidate you. You're going to need these strategies for the foreseeable market future, okay? I think stock picking out there, it's going to be rough for a long period of time. We can show you how and when to sell premium in a matter of a few hours. When I say that, okay, when I say like, how can we do that in a matter of a few hours? Well, one of the things I'm going to expose you to is right here. It's a start here menu, okay? We actually get you ramped up, okay? These are just shorter videos that you just go through. Options 101, options 201, okay? It's not going to take you a tremendous amount of time to go through a couple of videos. I don't mean to intimidate anybody by showing you the videos, but we can take you from absolute novice, okay, to trading within a few hours. That's what that start here menu is there, okay? But again, more importantly, we're now producing real-time trade alerts. Look, this is what you need to know to successfully sell Ultima Premium for a living. Obviously, what underlying stocks or indices make the best premium candidates, okay? What should I use for a candidate? You saw me use QQQs and spiders, but I also traded the MES. I also traded the ES, okay? Somebody asked a great question earlier. Okay, and it was like, well, how am I going to know if it's like ripe for Ultima? Okay, don't worry, just look exactly at the products we're trading. Products that we're trading are ripe for Ultima. Okay, what volatility should I seek out? Too little volatility, you're dead. Too much volatility, you're dead. Volatility has to have kind of a sweet spot. We don't want extreme volatility. Like, could you do this in a Tesla? Yeah, but it's chaos, man. Look, I'm not here for chaos. Okay, I'm here to sell that chaos, but I don't want extreme amounts of risk. I just want to get in, get out, make my 50%, okay, go home happy. What expiration do I select? If you looked at an option chain lately, for those of you that understand a little bit about options, okay, look at all the options in these chains. 0, 1, 2. There's daily expirations now, most of these products, daily expirations. Okay. What we help you do, pinpoint precisely what expiration to be on top of. Okay. What should be the delta of the option I sell? That's critical. Delta has to do with probability. What options do I buy against my position? The hedge. Okay. Not only do I have to know what hedge, I have to know how many hedges. How many hedges do I use? How many VIX vol spreads do I use versus how much am I selling? Okay. What's the ratio? Like what I blend? Okay. How do I build the position? Meaning again, well, what's the ratio? How many calls do I sell? How many puts do I sell? How many VIX volatility spreads? Do I need a large amount of capital to do this? Absolutely not. What's the right amount of risk for me? We can dial that in. Dialing in your risk is critical. What are the percentage returns supposed to be? Let me guess, 50%. Okay. How do I protect myself from market crashes? Things like VIX volatility spreads. We also have another one called an inflection point spread. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. When I say recipes in trading, actual step-by-step criteria. Okay. Step 1, these are the products you look at. Step 2, okay, liquidity. Step 3, expiration date. Step 4, probability. Step 5, and we get everything, every nuance down, okay, to how to actually execute the trade. But more importantly, we're now doing real-time trade alerts. Look, if I'm going to trade this stuff, why not? Shoot the trades out. We have the track record, shoot the trades out to you. Trading, it's all about answering the what ifs. When I talk about criteria, it answers the question, what might be a good stock or ETF candidate? What's the correct option expiration? How much capital do I commit? What strike options do you sell? Which strike options do you buy? How can I limit my risk? We have those answers. Okay, we have those answers. That's what we do here at TheoTrade. We build recipes with definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. Okay, the idea here is like if you hopped into the cockpit of a 737, pilots don't just go throttle up, let's go. Okay, put those seatbelts on, let's get out of here. That's not what goes on. They go through highly detailed checklists. Okay, pre-flight. We do the exact same thing. And then when you're actually in flight, okay, if something goes awry, what do you have? Okay, you've got specifics. What if the stock goes up? What if the stock goes down? We answer those questions. Okay, and now we're just taking it a step beyond. We're using all of our criteria, taking it a step beyond. Welcome to Ultima Alerts. Look, we'll give you the right probability for your trade. How many option contracts? When do I close my premium sell? What if we sell off big? Do I bail out of a trade? What if we rally massively? Can I fix a losing position? Look, trading is about how, it's about when, it's about why, it's about what price. And I'm going to tell you right now, that is just the beginning of the variables you're going to face while selling Ultima options for a living. Look, you can read about what selling Ultima premium is. I bet you right now you can Google. Anybody use Google anymore? You can Google what selling options happens to be. 10,000 pages are going to show up there. Okay. You know what they don't have? They don't have criteria. They don't have specifics. They don't tell you how to get in. They don't tell you how to get out. They don't give you alerts. All it says, you can sell an option. Yay. Maybe some of you have even built a few trades. What you're here for though, okay, is alerts. 20 plus years trading experience. That's just me. Actually, this is my 25th year in the business. Accessed and client order flow for 15 years. Viewed and studied millions of trading accounts. And again, that's just me. Okay, we're 8 instructors deep here at TheoTrade, and I ran education for 15 years at a firm with the largest option order flow in the industry. Okay, Ultima Alerts is your recipe for success. The following strategy, okay, which is selling Ultima Premium, and the corresponding criteria, okay, requires the utmost attention to detail. We literally spent years, people, fine-tuning, okay, this trade, fine-tuning this criteria, and now providing real-time alerts at the convenience, okay, of really any mobile device. The Ultima Income Generator Alerts, okay, there are 2 portfolios. There is a $5,000 minimum portfolio, okay, and a $50,000 minimum portfolio. Now, you can trade a $5,000 portfolio with as little as $2,000 in there, okay? These trade alerts for 3 months, okay, which is brand new, it's $297. Now, let me explain everything that comes with TheoTrade, okay? Because we're not just going to give, here's your alerts and you're done, okay? We provide you, okay, everything that we do here at TheoTrade and everything that we have done here at TheoTrade since 2016. Okay, we have 100 different classes we'll give you. We have coaching sessions, okay, thousands of them. We broadcast live for 6.5 hours a day. You have access to all of it. This is not just about alerts, but you're coming here today because this is the strategy, right? That's hot right now. And it has been hot for 2.5 years. Ultima alerts. Okay, if you go to theotrade.com/SKU, you can enroll now. Now, before I go any further, and again, I'm going to explain a little bit about what you get, okay, here at TheoTrade. One of the very first things I want to mention, because we have a pretty good number of people on today, the first 30 people to enroll today have a completely riskless trade, okay? 3 months. So first of all, it is $297, okay? That's supposed to be a 2, okay? It's $297 for 3 months. Everybody always asks, what happens after 3 months? Okay, this does not auto renew. We don't do auto renew. We don't do that here. If you want to do it again after 3 months, it's $297. This is not like an introductory rate. Okay, there's approximately 6,000 people right now on TheoTrade. In addition to it, okay, try it out for the next 90 days, which is basically 3 months, but we had to quantify it into exact number of days, 90 days. At any point in the next 90 days, okay, if it's not for you, we just give you your $297 back, okay? I want to make something very clear. There are no stipulations to a money-back guarantee, okay? The money-back guarantee is for the first 30 people that enroll today, okay? And we do that obviously to incentivize you. Make no, qualms about that. It's an incentive to enroll. There's no risk to you for the 90 days. Again, if you got to the 89th day and you're like, it's not for me, don't worry about it. You don't have to call us. You don't have to give us a blood sample to get out. Okay, just shoot us an email. Be like, hey, just give me my money back. No excuses, no questions. And I'll go through all of that in a second. But I want you guys to understand that everything involved in TheoTrade, because the one thing I'm pretty emphatic about, you could go out and spend easily $30,000 on a stock market education, and it'll pale in comparison to what we're doing here at TheoTrade. Okay, just absolutely bar none. You could easily spend $30,000. Okay, this education, that education. Some of you already have $297. Okay, your jaw will drop what we do over here. I mean, look, on our crew we have 3 CMTs. Almost all of us here at TheoTrade, including myself, we'd have almost every license imaginable on the brokerage side of the business. I've had a Series 3, which is for futures. I've had a Series 4, which is an option principal. I've had my Series 7, which is a general broker dealer. Okay, I've had my Series 24, which is a principal broker dealer. I've had my Series 66, okay, which is a 63 and a 65 combined, which is a registered investment advisor. I've managed over $400 million. I've also held multiple Canadian licenses and Australian licenses. Okay, so is it the P something down in Australia? I can't remember. Okay, P 72, I don't remember. Okay, but I've held like every license imaginable, as have, for instance, Jeff Bierman and a bunch of our other crew, okay, on staff. So look, we know this business. Now, when I say that everything, and I'm going to explain all of this for a second. First of all, TheoTheo is small. Okay, you can trade this with as little as $2,000. I suggest $5,000. I do. I don't mind saying I suggest $5,000. Okay, but what somebody says, what happens if I have a $15,000 portfolio? That doesn't fit. Yeah, it does. Instead of doing, when I send out like a 1 lot, which is 1 contract, instead of doing 1, you do 3. And we'll explain that as we go. Okay, if you have a $50,000 plus account, you follow the big boy account. Okay, that's the TheoTheo large. Now, if you have a $100,000 account, you just do double whatever the $50,000 account is doing. Okay, we even technically have an account. We can go up to 250,000. Okay, when I say up to, when you get above 250,000, we give you another suggestions. Okay, where you start trading much bigger products. So that's the first thing. Now you get alerts. The alerts. Okay, sometimes the alerts, it might be a week, 2 weeks between alerts. Okay, And all of a sudden you get a flurry of alerts. Today, there were a lot of alerts because the market's made a pretty big move to the downside. Nevertheless, okay, we send you trades. You get a few trades a month. This is not going to be sitting there all day long going, oh, is he coming? Like, don't worry about it, okay? Typically, when markets make a big move higher, a big move lower over a day or the course of a couple of days, it's usually when we're actually trading, okay? Volatility is either going up or volatility is collapsing. It's opportunistic. So you go to TheoTrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W, TheoTrade.com/skew. It's $297. By the way, there's no if, and, or, but about it. Anytime in the next 90 days, if you don't like it, okay, look, you get your money back. We want people, and I'm so emphatic about this, we want people that want to be here. We don't want anybody that doesn't, love the service over here. And again, I'm going to explain the money back guarantee in just a second. Before I do, okay, look, the Ultima income generator alerts. I am the one who actually trades this portfolio. So I don't pawn it off on anybody. When I say I trade the portfolio, you want to see the TheoTheo small portfolio? Okay. TheoTheo small coming up. Oh, I'm in the right account already. Coming up. TheoTheo small. You can see Theo small, Theo small, Theo small. Right now, there's only 2 positions left in there because I closed one of them today. So as I said, always have a little bit of inventory working. Okay. That's a TheoTheo small. Okay. You're like, what about the TheoTheo large? Big boy portfolio. I differentiate, come over here, okay, to thinkorswim. And on thinkorswim, okay, TheoTheo big boy portfolio is right here. Again, only 3 positions. Why? And most of them are about to come off profitable. So look at this, 44%, 30%, plus 7% in some of these positions, okay? Baking a little bit, but they're ready to come off. So look, positive theta portfolios, okay? No holds barred trading approach. You get to see everything, full disclosure on all trades, opening, closing, hedging positions. I am the trader for the portfolio, okay? And we have now the TheoTheo small portfolio. I want to make sure that everybody, okay, has the opportunity to trade regardless of account size. It's just, it does not matter anymore. It simply does not matter, okay? Now, before I go any further, okay, in addition to this, we still give you access to everything that we do on TheoTrade. This, okay, is a live trading room. When I say it's like a live trading room, it's a live trading room, people, okay? That's actually Tony Rago. He's day trading. So we have day traders in here. You get access to this. It broadcasts for 6 to 6.5 hours a day. The entire time the market's open, okay, we're with you, all right? You get access to all of our archives. What do you mean archives, okay? The archives, the class archive. I'm gonna open this in a new tab, okay? Every class that we've done since TheoTrade launched. These are the categories: option newbies, technical analysis, futures, bonds. I'm not joking when I say day trading. You can spend 30 grand. It'll pale in comparison to what we do here. Okay, here's some of the classes: Catapult, Inflection Point. Here's Ultima. Okay, what does a class look like? Want to see Catapult? Click on it. Okay, this is what I call the Catapult Confessions. So the Catapult class. Now in the Catapult, here we go. I'm actually explaining it, kind of taking you through a little bit of it, okay? And yeah, I think you'll really, really enjoy this one, okay? Another one that's a big one, Inflection Point, okay? Inflection Point spreads. As we actually take you in here, okay? Get to see full video, it's everything. I mean, every nuance that you're gonna need. And we actually give you criteria that's downloadable. Inflection Point spreads, there's an entire investing plan in here. It's all in there, okay? You just simply click on it. You have access to all of this. There's also a multitude of other portfolios, okay? So we have the TheoTrade tracker, that's in there. Ultima, obviously, is what you guys are in there today. Anyway, all of that is included. There's one huge addition, okay? We just added this. It has been an absolutely smash hit. Beginner's Guide to Ultima Trades Mastermind. We're doing a 6-week mastermind, okay? It's a mentorship. It is as close to 1-to-1 as you're gonna get, okay? There's only handfuls of people in here. The next one kicks off August 14th, okay? This is Brandon Chapman. Brandon Chapman actually was a coach with TD Ameritrade and ran a pretty big division, okay, of TD Ameritrade's education. August 14th at 4:30 Eastern time. 4:30 Eastern time begins 6 weeks of Brandon Chapman. Each one of those sessions runs like an hour to about 90 minutes. It's expert guidance. What it's designed to do, okay, is to jumpstart you. You know nothing about this business, nothing at all about this business. He's actually going to take you, okay, into it. It's Q&A sessions. You're going to have the opportunity to ask questions. There's skill building, okay, of how to actually, again, start in terms of Ultima, okay? And it's an incredible community. You can actually, talk to other traders. It's a group of other like-minded individuals. You can share experiences as you actually build into Ultima. Just to display this, okay, we are now providing this, right, mastermind on our site. Click get started now, okay? The mastermind, if you were to buy it, it's $1,000. We're throwing it in because it's been a smash hit. It's actually, if you will, okay, the mastermind is helping us extensively. It's getting people ramped up and able to sell Ultima Premium like that, okay? Instead of actually you figuring it out for yourself, okay? Brandon's actually holding your hand to do so. That is brand new, okay? We threw one together a couple of weeks ago. When I say it's been a smash hit, okay, the success rate of those clientele is going to be huge, okay? Multiple fold better than we've done in the past. People have just kind of onboarded themselves. Oh, come to TheoTrade, it's all good, okay? And watch some videos. This, okay, it's one-to-one interaction. You ask questions in the chat room, he'll answer you one-to-one. He's typing answers in the chat room. You have access to Brandon, okay, as much as you want on email, as much as you want. Fire emails, okay? He's not doing anything else. He is now dedicated, okay, to this, to getting you ramped up to Ultima. So again, it's an incredible value in there just for the mastermind, okay? You're not paying the $1,000, still $297, okay? We're doing this because we think it jumpstarts you and we think that our clientele, okay? Well, how do you possibly do that? How do you guys stay in business? Because we hope that you don't, just here for 3 months. We hope you sign up again for another 3 months and another 3 months, okay? And that's critical to us. Look, TheoTrade is a completely riskless trade. There's a 90-day money-back guarantee. If you're not satisfied in the next 90 days, just email support@theotrade.com, okay? Receive a full refund. And again, we're only talking about, I want to make something clear, we're only talking about $297, all right? That's it, it's $297. The money back guarantee stipulations, there are no stipulations, no excuses, no questions, no commentary. The dog got sick. It's fine. Like, I get it, man. Sometimes life gets in the way. I get it, okay? If you would, follow me right now over to TheoTrade.com/SKU. Again, TheoTrade.com/, S is in Sam, K is in kick, okay, E is in echo, W, TheoTrade.com/SKU, okay? As I said, there are 30 riskless spots, okay? You click add to cart. I just want to take you into this for 1 second, okay? As you click add to cart, make sure you put your phone number in there because it will automatically enroll you for text messaging. By the way, you can do single payments, 2 payments, 3 payments. That's up to you. But there is a full money back guarantee associated with this. Okay. I mean, you get access to all the classes in there. Okay. I mean, you get access to the chat room. Okay. We have now just added, this is $1,000 6-week mentorship. It's been added. Okay. And this is it. It starts again, August 14th. Why? We're doing a presentation today. It needs to start August 14th. We want to get people ramped up as fast as possible. Markets are volatile right now. It's a phenomenal time to be able to sell premium. Like get started. I can tell you right now, we can have you up and selling premium in a few hours. But you really want to master the whole skill set, spend 6 weeks with Brandon. Not asking for a lot of time in there. I'm telling you, it is worth it. Because any other place, they'll charge you $5,000 for a 6-week mentorship like that. And there's only going to be handfuls of people in there. And yes, everything is recorded. And yes, if you can't make it live, you can listen to the recording, okay? And then email Brandon for questions later. So let me answer a couple of questions in here. Again, money back guarantee on all of this. Even if you go through the mentorship, there's a money back guarantee. I mean, look, we're pretty well situated. We have 6,000 members right now of TheoTrade and clientele. As I said, it's $297. We don't, okay, auto renew. We don't auto bill you in any way, shape, or form, okay? And at any point, as I said, we want people that want to be here. We want like-minded people. We want people that learn how to trade. So the Ultima alerts obviously come to any mobile device, okay? So we do Android, okay? Obviously, we do iOS. I actually like it. I even get push notifications on a watch. Okay, and I wear the watch. It's probably the best money, for whatever. I think you buy a watch now as low as like a few $100. It taps you on the wrist. It's unmistakable. And you execute a trade after that, and it allows you to do that. This is what the portfolio looks like. These trades can even be copy and pasted directly into a platform. Okay, and as I said, this is kind of what the trading platform looks like, or sorry, our portfolio looks like. Okay, and this is 2022 Ultima portfolio returns on a $50,000 account. If you're in the $50,000 account, it was 56.6. Okay, it's $28,314.75. Okay, that was a fairly volatile year. It's a great year. It's a phenomenal year. Volatility hasn't been as good this year, but as I said, it's picking up right now. Okay, and there's still a whole lot of year left. In addition to this, we do weekly alert updates. Okay, so at the end, of a week on a Friday, any moves that I've made in the portfolio, I update you on in 12 minutes or less. Okay, and I'm emphatic about it's 12 minutes or less, period. Okay, in 12 minutes or less, every move we've made strategically in a portfolio, whether it's TheoTheo small, TheoTheo large, okay, all of the portfolios, they're covered. So you can actually, hey, I want to actually learn a little bit more about this. Okay, fantastic. You can actually go back and see everything I've done, why I did it, what I was thinking when I was doing the particular trade. By the way, this is what text messaging looks like. Okay, so right here, we're selling a 4,700 call for the set 15. Okay, this one actually, ironically, this one just got closed today. Was sold for a $10 credit. We are out of the contest. That one is actually, this is the opening trade. But when I say this is what a text message looks like, this is, specifically TheoTheo small. This is the small portfolio, Sell, one of the 4,700 calls, SEP 15 AM 23. That basically tells you the exact distinct location to find that particular option. We sell it. Okay, what price do we sell it for? $10 credit. Then what do? We wait and then close it for a 50% gain. Now, what else we got? Okay, next trade over here. This one apparently was from June 6th. Okay, closing for a 50% profit. Okay, it was buying to close the 33.75 puts. Okay, again, SEP 15s. This one, selling a put for a $17 credit. Okay, this one, oh, this is interesting. This one's actually a rolling order. Okay, this is about as complex as things will ever get on here. In one hand, we bought something, and the other one we sold it. That's actually one transaction done for a $9.75 credit. Okay, I like it. This is actually one that we did much more recently, and it says this is a rolling order on an existing trade. Okay, not a new trade. Trade may be legged as two transactions. That is the most complex text message we'll ever send you. Okay, so you get to see everything, and that's exactly what it looks like. What our members are saying. Okay, consistent, valuable education with remarkable return on investment. Consistent value education that is supported on an ongoing basis for us users. Okay, long term with very successful results. I've been a member of TheoTrade and a student of several mentorships they offer for about 2.5 years. Okay, that mentorship is now included. That mentorship is Brandon Chapman. That's included. Those things used to cost thousands of dollars. We included it. Why? Because it jumpstarts you. Okay, your longevity in TheoTrade, is like tenfold greater if you've gone to the mentorship. That's why we're including it. Like it's $1,000 mentorship. We're giving it to you right now. Okay, 2.5 years and very quite satisfied and actually enthusiastic about the programs. Okay, again, TheoTrade is very inexpensive. Okay, for what it provides, and the results pay for the cost involved many times over. I don't mind reading this part too. Have some reviews, where it's clear the objective of those reviewers was to find something wrong and whine about the costs. Too bad for those reviewers. I like that one. They're missing the point. It is incredibly. It's $297. And again, we give you full email support, anything you need to be successful in here. So as I'm actually doing this, I'm going to read off a couple of names. I want to make sure that everybody understands. I'm going to read off a few names. These are individuals that have enrolled. Again, there are 30 riskless spots available, 30 riskless spots available. Okay, I'm just reading off a couple of the individuals that have enrolled. I'll just read off your first name and the first initial of your last name, but Kevin W. from Texas, Mike B. from Canada, Gary W. from California, Stephen B. from North Carolina, Joseph E. from Illinois, Rick C. from California, Stephen S. from California, Sandra D. from Nevada. Okay, so that's the first batch. By the way, it takes me, I think there's a batch it's about 8 people. It takes me anywhere from 5 to 7 minutes before I see your name kind of appear in here. So, again, we've got 8 of those 30 spots that are presently filled, and obviously a couple more filling up here. Just more names are populating as I'm going. All right, this one comes from Paul M. The education is second to none. Okay, and if you're a novice when it comes to markets and trading, the training material is superb, professional, organized, and written in plain English. The professionals at TheoTrade have all of the content, okay, that can get you wherever level you want. Okay, take your trading, investing education, and skill tube. Been a member for 3 years, and I'm still growing, learning, and really enjoying the experience. Okay, this one comes from Jeffrey. I want to thank you, okay, for all the different staff point of views. This year, I did more of what works and less of what didn't. Thanks to your selling premium, and that's IPS, which stands for inflection point. Okay, I took 12K to over 32K in 18 months. Okay, I've been doing your method. Thanks again so much, and look forward to the new ideas in coming year. So get into TheoTrade now. We're going to work with you directly. There are 30 spots on the riskless deal, and we do that obviously to incentivize people, but we give you unlimited email mentoring. By the way, that's for the term of your membership. And I want you guys to understand that you pay $297, okay? And you come here and, after 3 months, what happens? You could pay another $297. You still get to access us via email. If you need to get a hold of somebody, including myself, and I want to make that very, very clear here, is that there's this feeling like, I'll never get to talk to him. Shoot me an email, okay? Just put Don Kaufman, send to Don Kaufman, put it in the subject, okay? It'll go to me. I don't mind. I answer hours of emails a day. Like, I've been doing this since early days of like thinkorswim. It's one of the things I learned early on at thinkorswim. Okay, you want traders to talk to? Okay, we don't shy away from answering emails. That's one really critical differential. Okay, and when I say answering emails, like hypothetically, if I were in this position, you know what? Just cut to the chase. Send me the trade. Okay, if something's blowing up in your face, though, please try to get to me before the bomb has gone off. Like, I want to see the trade if you're in trouble. Okay, $297, it save you more than $297, okay, answering one email. Think about that for a second. I answer one email and help you out of one bad position, okay, it could save tens of thousands of dollars. So we provide that guidance, that mentorship. We'll hold your hand. And by the way, you can be here. You can be in a chat room every single day communicating with us. I'm on for 1 hour a day, okay? This is not like Don owns part of the company. I'm one of the co-founders, but this is not Don owns part of the company and you'll never see him again. I'm on for a minimum of an hour a day. Why? Because I have nothing better to do. I am in now my late 40s. I can't believe that crap happened. I'm in my late 40s. Okay. I got 3 kids, right? I live right now in the Virgin Islands. I go back and forth to Arizona, but I live in the Virgin Islands. There's not a whole lot to do here. We have a beach and we have trading. That is it. Okay. So answer hours, emails a day. By the way, this is Tony Rago talking about, okay? He's talking about trades, that setups in here, okay? Brian Aponte is actually helping answer some questions in here as well. It's good stuff, okay? So he's actually calling out different trades. +5, he just booked 5, okay? And then he lost 1. You can see everything he's doing in here. -1 means he lost 1 handle, +5 means he made 5, okay? It goes on and on. So you get to see everything that we're doing here, okay? We call out trades live in the chat room. We're not afraid to trade, okay? Everybody here trades, people. Everybody trades. If you want to sit there and trade throughout the course of the day, okay, absolutely go for it. Anyway, it's, and again, I'll pop this back up here because somebody else was asking again, okay? It's theotrade.com/SKU. All right, I'm going to answer a couple of generalized questions. By the way, the $297 riskless offer, it's never been available before with Ultima Income Generator. And of course, now we're doing this mentorship. It's 6 weeks of a mentorship, which is phenomenal. Again, Brandon, okay? In all honesty, Brandon is far more methodical than I am. I'm not good for beginners, okay? I shoot over people's heads and I know it, okay? It's okay, because it's, I drink a little too much caffeine. Brandon is about as mellow as it gets. Take all the time in the world. You guys are going to love him. text messages, okay, different phone numbers, some of the text messages. Again, TheoTrade.com/SKU. As I said, I'm going to answer some questions for you. I've been a subscriber for 4 years. Okay, this is the only organization that has actually taught me how to consistently make money in the markets. Okay, questions. What do you need to get started? You don't even need a laptop anymore. You just need an internet connection and a phone. Okay, it used to be that you needed a laptop, and I actually left that in there because I wanted to make that distinction. You don't have to have a secret squirrel supercomputer over here. Look, I have 6 monitors. I want to know why? I got to broadcast to people. Okay, it's hard because I need 3 monitors for what I'm looking at, and 3 monitors to monitor this broadcast. Okay, so that stuff is critical. Anyway, we have everything you're going to need to get started, from absolute novice to the most extreme. And for those of you that are experienced, okay, if you're experienced, I wouldn't shy away either. Okay, you'll pick up a lot. We have, I mean, again, all the way from A to Z in terms of like archives, okay, to show you the depth of the archives. And the archives, they are deep. Where are we? Let's go over here, okay, show you the depth of the archive. We have everything from some very basic classes, okay, to surviving and thriving extreme volatility crash courses, backspread courses, okay? You get access to every single class that we've ever done. Every single class that we've ever done, okay? We have new classes obviously coming out in September as well. Okay, September will be the next major class. By the way, Steve B from California, Gary R from Wisconsin. Just reading off a couple more names as they're coming in over here. Look, this is not a membership. We don't auto renew or bill you again. So we ask you, if you want to do this again, it's $297. You have to say yes or no, obviously. Okay. We're now providing weekly update videos so you can follow all the moves we make. We provide you access to TheoTrade Mobile. TheoTrade Mobile. What TheoTrade Mobile basically is, okay, it's just that. Okay, everything that we do, we archive, and everything that's archived is on TheoTrade Mobile. TheoTrade Mobile is awesome because it does push notifications, but it also has like, you can listen to an archive like if you were driving. Okay. You can download stuff. It works kind of like Netflix. You can download and then listen to stuff when you're offline. You can speed me up and I sound like a chipmunk. It's wonderful. Okay. We give you access to mobile. We do push notifications. Add your cell phone number when enrolling to receive alerts and text messages. You can email us anytime. Receive a response within 24 hours, including trade-related questions. Variations of the trades are available inside of an IRA or retirement with as little as $2,000 in the account. Again, we can help you get approved for options at several major brokers. Some people, like, their biggest problem is like, my broker won't let me do this. My broker won't let me do this. We have brokers that let you do anything you want. Okay, we work with a number of brokers. In fact, okay, I didn't even mention this, but we're an education firm, but we have relationships, okay, with everybody. Tasty Trade, Magnify, Tradier, E-Trade. Okay, we also have relationships with major exchanges, including the Chicago Mercantile Exchange. Okay, we just did a deal with the Chicago Mercantile Exchange. They are now a direct sponsor of TheoTrade. So think about how many education firms are out there. Okay, how many of them have an exchange that's sponsoring? Okay, none of them. The brokerage firms do business with the exchanges. Now, okay, we're like the first major education firm that's doing business directly with exchanges. And we picked the Chicago Mercantile Exchange. Remember, there are 30 riskless spots. So hop in, get results, take action, roll for TheoTrade now. So I think I got most of the questions answered in here. Okay, I wanted to make sure that everybody is good. Okay, we'll stay with you guys for the next few minutes, maybe answer a couple more questions. There's a few more names popping in, and I apologize. I've read off, okay, about 12 names thus far. Nevertheless, okay, I know that there's a few more people coming in here. Okay. Yeah, by the way, Carmel, feel free to, Carmel was saying having a problem transacting. Okay. Feel free on here to hit us directly right there. We are here. Okay. And you can chat directly with us and we'll get you taken care of. Okay. That's the easiest, most direct way. Because if we have to, we can always pick up a phone and even give you a call. Okay. Not a problem. So cool. Steve, I see you in there. Fantastic. As I was saying, I didn't necessarily get every single name rattled off over there. But again, I'll throw this up here one more time. By the way, that thinkorswim link, okay, is located on the bottom of this page. For those of you that are enrolling, though, you have access to every study we've done. Okay. We build all kinds of different studies, different platforms and so forth, but that's the auto expected move indicator for thinkorswim. As you come in here, as I said, simply click add to cart. Okay. You're good to go. And again, today, that $297 includes that mentorship. Okay. And the mentorship, I think you guys will really get a huge amount out of it. So I will leave this on the screen. Again, it's TheoTrade.com/SKU. Okay. And it's Ultimate Income Generator Alert Service. I want to thank everybody for tuning in today. Have a wonderful afternoon. Bye-bye.